Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, welcome back to another live stream. Hope you're doing well. Hope you're staying safe in these crazy markets. And yeah, like I said in the opening there, if you're looking to get funded this year, check out DNA Funded and use that promo code A1T20. It'll get you 20% off any of their challenges. Makes for a much lower price. So check it out. So yesterday we had some news. And today we have some more news. We have GDP numbers this morning. We have unemployment claims this morning. So a couple market moving impact things. But for the index traders out there, for traders watching the NASDAQ, for watching, NQ, watching whatever you trade, right? We've got some interesting stuff that took place yesterday. After the bell, we saw Nvidia surge higher here on some really good earnings. And I think it was not just Nvidia. We also had Salesforce. Well, initially it moved higher, then it moved back down. I think Elf Beauty was also a big mover. Yep, that's another stock I used to own. I wish I owned it more now. My goodness, 20% at one point from the lows back high, 11.5% in the pre-market here. Big moves for a lot of stocks, and the indices surged as well, as you might imagine, with Nvidia being kind of a key player at the table. We saw those Nvidia results come in better than expected on both the top and bottom line. I heard someone say that is the eighth consecutive quarter that they have beat both their earnings and revenue. Consistently, this company has just come in and beaten expectations. It was, and still is, in my view, the leader of the AI trade, the AI, movement, all this excitement around AI. Obviously, you need powerful chips in order to do the kinds of things that people really want to do with AI. And we saw in advance to this, I made a post in our Telegram channel. Let me see if I can pull this up. I made a post before the earnings just saying, and I didn't know that the earnings were going to be this good, but I assumed that they were likely to be good based on a few things, specifically with several of their major customers, Microsoft, Tesla, Meta, all these companies that are big customers of Nvidia. No wonder why Nvidia has grown so much. Their biggest customers are the biggest companies in the world. Microsoft, Tesla, Meta, all these companies buying the heck out of Nvidia chips. And in those earnings calls, which we got before Nvidia's, most of these companies reiterated their strong intentions to spend big on AI, which who is the big winner in selling AI? Nvidia. So I mentioned that I like this company for the long term. I've been a shareholder of Nvidia for, I guess, a year and a half now or so. I bought it in a dip. I bought more of it in the recent dip that we saw in the, tariff trauma stuff. Everybody freaking out about tariffs. I went and bought some more Nvidia. It's a company I like, and it was on sale. And I'll talk about, I could go into detail. Actually, what I'll do is I'll show you the chart that I pulled up from the stock box. Just pulled up this, kind of our financial summary on the stock box, which is another tool that we use for stocks. Their income, their revenues, growing at a steady pace, and their price to earnings. I know it's hard to see on this screen. They're actually priced relative to their own history pretty cheap. Nvidia's stock, relative to its earnings growth, does not look outrageously expensive to me. So anyways, I own the stock. I'm happy to see it up again today. Puts us in terms of where we are, right? So there's that yellow, that's the pre-market. The market has not yet opened up. How far are we from the all-time highs? About 8%. I would not be surprised whatsoever if in the coming months we do continue to drive higher and to take out those highs and we put in fresh highs for Nvidia. I think so too with the market. So feeling really bullish about the state of things. We had all things considered, my gosh, the bears came in heavy and loud about earnings season, saying that companies are going to cut their guidance because of all the tariff stuff, and companies are going to miss revenues and it's going to be awful, right? That was the sentiment out there. And what we actually got from earnings season was resiliency, strength, and far fewer companies than expected issuing negative guidance or no guidance at all. We saw for the stock market bulls out there, earnings season was a huge win. Not only was earnings season a huge win, the development in the trade stuff, I would say, is a huge win, because we've seen the Trump administration swing a big hammer and then take it back, right? That's kind of what's gone on. Like, there was this big fear that there was going to, and I've been ranting about this a lot recently, but it's important that we internalize this, because there's a lot of people who are just like super perma bearish in all this, saying that, we're entering into a global recession, earnings are going to be horrible, CEOs are going to lay off everybody, it's going to be the end of the world, right? Doomsday was everywhere during this time. And then just like that, we had one of the speediest recoveries that we've ever seen in stock market history. You're talking about from the lows here, guys. The NASDAQ was at one point up in the pre-market here, 33% in 52 days, 37 trading days. Incredible, right? Now, again, I think that the reason for this sharp bounce back is not, I'll say this, it's not just like this move lower wasn't just because, oh, Trump's awful. This move up is not just because, oh, Trump's awesome. Let's not be silly about this. The reason is because this was a self-inflicted wound. By doing all the tariff trauma stuff, everybody's getting a tariff. That's self-inflicted. You can stop doing that activity if you want to, and that's what Trump administration seemed to have done. Now, it doesn't mean that they're done with tariffs. It just means that they were like, okay, we're going to do the ultimate extreme tariffs. And they said, you know what, let's walk it back. And the market absolutely cheered, right? So the market absolutely hated it. They were like, no, this is stupid. We're going to go into a global recession. I'm out of here. And then they walked it back. And the market said, okay, that's better. So I think it's very natural for this market to say, okay, the worst is not going to happen. So where do we go? We should go higher, right? Because company earnings grew. Company earnings look good. The economy is holding up well. Yesterday, we did a deep dive on the labor statistics. We did a deep dive on employment data. We looked at inflation data. We have a good canvas that we're working on, right? Overall, things look decently good for stocks. That's why on the Edge Finders calculations, we are getting very strong readings. We're getting a plus 15 on the Dow Jones. S&P is getting a plus 13, NASDAQ plus 13, Russell plus 10. Indices have been screamingly bullish on the Edge Finder for the last few months. And it's been awesome. And I'm not just saying that because I can show you the historical score. If we were to pull up, let's go NASDAQ. We did this the other day. So let's go NASDAQ and we'll go back since the beginning of the year, right? When did Edgefinder get bullish on the S&P 500 or the NASDAQ specifically? Well, it was bullish in January. It lost its bullish reading February, right? So in February, it was neutral, out of the way, no trades. We got our full initial bullish reading early in March. Then we got some more bullish readings and we went back into neutral early in April. But then April 15th, you got a very strong and persistent bullish rating on the Edge Finder, and you could see the reaction to price during that time. So anyways, we have news coming out here. We have preliminary GDP numbers. Let's see how those impact the charts here today. I'm very curious. We have about 40 seconds to go until we get preliminary GDP numbers as well as unemployment claims. Let's see how those come out. Stick around after the move. We'll talk about how this potentially impacts Edgefinder scoring, but also about how it, what it says about the US economy. We've got about 30 seconds to go. Again, we're going to see the preliminary GDP numbers. So we have the advanced, then the preliminary comes out, then the final GDP. So we're getting the midpoint of GDP numbers for the first quarter here. And so let's get an idea here. Coming in, breaking news. Still waiting on the number to come out. We've also got, like I said, unemployment claims dropping as well. All right, preliminary GDP came in better than expected. We were forecasting for minus 0.3, minus 0.2 came in. However, unemployment claims spiking up to 240,000 jobs or unemployment claims compared to the forecast of 229. That is a little bit of weakness there. So a little bit of weakness in the unemployment claims, a little bit of strength in the GDP numbers. Let's have a look at the reaction here in the markets. Dollar index is lower off of that figure. Gold is higher. So we have seen, in terms of our preliminary number, a better than expected print. Now, this is still contracting GDP. However, it's contracting less than expected. It's like if you were looking at a weekend weather report and it said the weather's going to be stormy and rainy all weekend long, and instead you got some sunshine, some rain for the weekend. Still not perfect, but way better than expected. So where does this put us? Well, unemployment claims spiking up. That is obviously not ideal, but it's not crisis mode. If we take a look at unemployment claims before this week, let's see. Unemployment claims, here we go. So this data hasn't yet updated. It will update in the next, very shortly. If I take a look at the historical, however, what you can see here is that we've been hovering around. We've had these spikes before, like 241K came in, but I wouldn't read too far into it with just one print. We get this weekly. There is some noise that can occur, right? And we saw last time that occurred, it came right back down the following week. So could that be a persistent thing? Well, again, let's see if we get like a couple weeks of increased unemployment claims. That would be different, but I wouldn't read too far into a singular pump up in unemployment claims this week. It's about what, 10, 11, 12,000 more than we expected. So not insane, but certainly something to keep an eye on. They also revised by 1,000 lower the previous week's number, and preliminary GDP price index came in as expected. Okay, so market reaction here, S&P 500, a little bit lower from where it was, but we had a huge rally off of the Nvidia earnings. NASDAQ also pumped higher. Gold is higher here today, back up to 33.11 at the time of recording. Bitcoin's up to 108. Dow Jones moving lower here. Russell moving lower here. But again, both of these pumped higher on the overnight kind of earnings that we got. The dollar index is lower here. Let's take a look at the dollar here. DXY. Gold had an interesting sell-off overnight. Look at this interesting candle on the dollar index. Is that right? Did we actually get a big gap up in the dollar? Yeah, I mean, look at that. So we had a really big move briefly in things like euro dollar. On the hourly chart, you can see big drop and then rebound. Pound US dollar, I was looking for a buy. It left the station before I could get to it today. Look at that beautiful rejection off of this area of support. Would like to see this thing come down again. If it does, I'm probably a buyer of the pound against the dollar. But I also, some stuff happened with my yen trades. A lot of my yen trades. How's the yen doing today? So yesterday, some of my yen trades that I had completely reversed upwards. So I'm long as of over here. So I'm like break even on NZD/JPY, and I'm like break even on dollar yen. I do think these have upside. I also accidentally deleted my chart markups on dollar yen, which is a little bit annoying. Let's see if we can do this. There we go. So on dollar yen, I'm thinking a good move or a reasonable move to look for in my my view is a move back up to like 148. If that happens, I'll probably take some profits on this trade on the FX side of things. Pound yen also looks really, really good. I mentioned yesterday to members in our Discord that I was looking to add pound yen to the mix. I have dollar yen longs and I have Kiwi yen longs. I was looking to add pound yen longs, but didn't quite pull back enough on the yen. I was looking for some more shorts on the Japanese yen, so I was looking like for this area just to add into my basket. Let's see gold in terms of reaction to this. So gold, really crazy, like 12-hour period here for gold in the last little bit. You can see gold prices shot lower overnight and then bounced back. Doesn't look like much on the daily chart, but if you drop it to like a 1 hour, you can see we had like this really big fake out move below support and then price rallying back. And look at the strength of that candle here this morning. Really strange move. Occurred overnight here with a lot of currency pairs, a lot of stuff. The VIX is lower here today by 1.4%. Here's my Russell trade. So I'm long the Russell. I made a note to members in our Discord. Let me see, where's our Discord? I made a post in our Discord here on the Russell trade. I said I'm planning to trail my stop loss into profit if we can break through the 2100 level of resistance more decisively in the coming days. So the 2100 level is this area here. So if we can get something more decisive closing above this, like if you get basically this wick that we saw, if we were to close decisively above this area here, what I'm going to do is I'm going to take this stop loss and I'm going to move it into profit. But I'd like to see something like, let me see if I can show you something like this. Like if we were to see the candle kind of close decisively up here, then I'm probably going to take that stop loss and move it like right there just to lock something in. But I'm not in a hurry to do that. I think that the Russell has plenty of upside. And I don't want to preemptively move my stop. Just because we wicked above there does not mean I think like, oh, that's completely going to fail and reverse. I mean, it could, but I like the upside for indices. I think that they do continue higher, path of least resistance here. And so I'm willing to keep my trade on. I may choose to just at least trim my stop loss a little bit. In fact, I think I will do that just to trim it below this low because I really don't want to see it come back and fail below that level. Because at that point, if it comes back here, right, price action wise, I would expect it to at least react from here. So I don't need to take any extra risk there. So I probably will trim my stop a little bit on Russell, which is not a move into profit, but it's a trim the risk to like there or somewhere close to it, right? Just to keep that under control. So I'm gonna probably do that post stream. So we'll keep an eye on that. But I do like the Russell's upside. I also like NASDAQ looks so good. NASDAQ's like closing in on a fresh all-time high, which is so impressive to consider everything that we've gone through in the last few months, like all the craziness with trade dynamics and everything like that. Just to see the stock market back towards its fresh all-time highs just shows the resiliency right now of the U.S. stock market. Let's take a look here in terms of some sentiment readings. Let's take a look at the crowd sentiment. Put to call ratio on S&P 500 has gone back to neutral territory. Yet again, proving the really solid signals that we're getting from the put to call. All this is showing us, guys, for new viewers, When this level goes high, it signals that a lot of volume is happening on the put side of things, which are bearish bets in the stock market and the options market. And when this thing goes really low, it too has signaled perhaps some overbought status, some euphoric sentiment in the markets as people are buying calls very aggressively. The put to call genie. Hey, you can call me that, you know. I could put that on my my business card. What if you ask somebody for a business card and on the bottom their like title just said put to call genie? My eyes would just go wide. I'd be like, what? If you know, you know. Put to call is like my favorite indicator of all time. It's so simple, yet so useful. I look at it all the time, and I've also, you know, built this indicator with my team to make it so that you can look at put to call ratios for multiple assets. So like we could look at gold's put to call. Right now it's very neutral. We could look at silver. I think had a little bit of a over kind of extension in terms of the call side. A lot of call demand over here for silver. US oil, very neutral, but it was recently in the extreme greed category, people buying calls like crazy. Like if we look at the Dow Jones, this thing is really neutral right now. Let's look at NASDAQ. NASDAQ, still a lot of fear around the NASDAQ, which is interesting because I think we saw that also in institutional money, COT data. Let's take a look. Did we see that? Yeah, we did. So NASDAQ also had some selling that took place. So we see it in the put to call ratio. We also see it in the commitment of traders data. So I like looking at the COT and I like looking at the put to call. Those are my two favorite sentiment indicators. However, we did also get the AAII Investor Sentiment Survey, which you can see did tilt once again back into more bears than bulls out there. You can see 33% of respondents said they feel bullish on the stock market, and 42% of respondents say they feel bearish. So we talked about this a lot during all this craziness. Everybody was bearish. Like it was such a resounding, I've never in my career seen bearishness like we saw in the last 3 months. Like it was incredible, right? Consumer sentiment reports were awful. Investor sentiment surveys like you're seeing right here, terrible. People super, super nervous about the market. And and who, you know, you should be a little bit nervous when you see the whole trade dynamic switching up. But I've done this for a long time, and I've just found that it's amazing how good the markets are at taking money from the majority of the way people are thinking. A lot of the time, when everybody is bullish, the market finds a way to tank. And when everybody's bearish, finds a way to short squeeze them. And that's exactly what we saw. So is that an easy rule to follow? When everybody's bullish, get bearish. When everybody's getting bearish, bullish. It's a simple concept, but it's not as easy as it sounds, right? Because when the market was falling, not going to lie, it was pretty scary to be buying this market. This market looked like it could very quickly erase a couple more years worth of gains very quickly at the time. But the market tends to reward calculated risk taking. Like when the market's fearful and everybody's terrified, there's some really good opportunities. And those have historically been my best trades in my personal trading career. Also things like gold during this, I bought the gold momentum. Yesterday, we had a bullish reading on gold. I'm curious to see if we still have that. So if I go top setup simple, I don't know for Edgefinder users, if you like this as much as I do, but I love this new top setup simple page because when I don't want to like deep dive on why the score is the way it is, and I just want to see a watch list, top setup simple, all I need. Because with the top setup simple page, I get a general idea of like, where are we getting our score strength? Is it the economic data? Is it technicals? Or is it sentiment? It's all right there. I get it, but I don't have to like necessarily go under the hood and look at every single data point every time. the top setup simple page just shows me a watch list. And let's say that you're a currency trader, right? So if you're just a currency trader, there is your current list of strong convicted setups by the Edge Finder in a simplified manner. And then you can go look at your own technical setups that you like, etc. For me, let's say I'm talking about indices right now. Here's my list of indices that have a bullish or bearish bias. And by the way, you can add in neutrals. So if you want to see the rest of them, just add in your neutrals right here. But if you have Edge Finder, I've been finding myself using this page more and more. It also, just from a selfish way of doing things, it makes it way easier on my content for you guys to see this. Like, this text is way bigger, makes it a little bit easier for readers to watch along in my content, which I think is pretty useful. So yeah, it's been very, very strong, the bias on Edge Finder for indices. But anyways, guys, I want to just make a quick plug here before we take the stream to our next component, which is, of course, with Miko and Marco here. Just want to let you guys know that we are doing a giveaway this week for a Gold VIP membership, which is a free membership, or not a free membership, but we're doing a free giveaway to a lifetime membership within our Discord group. Within the Discord group, you can get access to every trade that I'm taking, full context, full transparency. And this morning, I just filmed an updated performance report of my last 5 years of trading on my Webull account. I'm excited to share that with you guys. It's in the editor's chamber, and don't ask me what happens in there because I don't know. It's beyond my head. They do some voodoo black magic to make my videos cool. And yeah. So anyways, if you guys would like to join the giveaway, here's how you can do it. Step one, join the Telegram channel. We'll drop the link here. Boom, there it is. Join the Telegram channel. That's step one. Step two, I just dropped it in there. Step one, join the Telegram, link in the chat. Step two, throw your name in the hat using that form. We'll be announcing a winner tomorrow. Okay, guys, up next, we've got Miko and Marco joining the call here to take a look at some top setups that they are looking at in today's crazy market. Stay tuned. We'll be right back. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, guys, we're back with Miko and Marco. How you guys doing?
Hello.
What's up? Good to have you guys back. We do this every single week on Thursdays. We call it Technical Thursdays, where we go through some charts, markups, things that we are watching. I want to go right to you guys and ask where we usually start, chart of the day. Favorite idea or thing that you are looking at in this market right now. Marco, what do you got for us?
So for me, it is gonna be NJ, which I do have a trade coming from this sort of reversal, but it's like a 90 pip stop loss. So sorry, I forgot to put it in. And it's currently running some okay percentage. So this is more of a long-term play and just trailing the position. So for NJ, I'm just kind of watching this, keeping it running, trailing it on these, let's say, swing lows on the daily chart. But for entries, I think the pound dollar is looking very interesting right now because you have the Edge Finder, which is bullish. You have a good environment, in my opinion, for the pound dollar to go up. Pound has been getting some really strong numbers. And we broke out of this key level of resistance right here, which we now sort of retested. So for me, I'm now looking for any sort of an entry on the 1 hour chart, like a flag or a little bit of a pullback, break of the high and a retest. And I'll be pretty happy to get in, probably with a stop loss of, let's say, 100 pips. I think that would fit my game plan nicely, and then the plan is to just trail the position if it goes to the upside. If it does go down and take me out, then I'll need to reassess the whole situation. So yeah, that's it.
Very cool. Miko, same question to you. What's on the watch list for you?
Yeah, so at the moment, I'll probably say some shorts on dollar CAD look really good. I'm pretty bearish on the USD, and I'm liking the area which we are currently rejecting. I would like to see a bit more development here, perhaps a bit of a double top before I do enter, but for the time being, it does look like price is respecting this area very well. USD CAD as a whole has been on a very nice bearish trend here, and I do think there's still a bit more juice left to squeeze. I'm pretty bearish on the DXY. I think that's still got room to fall. So I think dollar CAD can still see some more downside, and this zone looks to be proving as solid resistance at the moment. So as long as that can hold, I do expect us to hit the lows and potentially go further as well. Currently, I'm long on New Zealand CHF, but I won't be looking to enter that one now. It's been a bit flat, this one. CHF pairs haven't been moving great over the past few days, but I do think there's a lot of upside for New Zealand CHF. It's coming from all-time lows. I do think we can see a bit more of an uptrend here. But in terms of right now, I think dollar CAD looks really good. Pretty bearish on the USD, so anything against the dollar right now looks pretty good to me, and dollar CAD looks probably one of the better ones, in my opinion.
Yeah, it's interesting. Both you guys, dollar CAD looking interesting. I also find it interesting that all three of us are kind of looking at the New Zealand dollar with a little bit of a bullish bias. Marco, you mentioned NZD JPY, and Miko, you mentioned NZD CHF. The New Zealand dollar has been really strong here recently. A little bit of a bounce back across a lot of different currencies. I also like NZD JPY. I'm long and about break even on this trade right now. I was looking to, I think last time we spoke, I was looking for a move down here to add a second position to my dollar cost averaging approach to this pair. Looking for at least a move up to 87.5. So I would say that's probably my chart of the day as well, just to go off of the New Zealand dollar concept. Marco, you mentioned the British pound against the US dollar. Any other dollar index or dollar crosses that you find interesting right now?
So other than the pound, nothing is really on my watch list. They have some other things such as indices and Bitcoin, but for currencies, it's purely pound dollar and New Zealand yen. I don't want too much exposure, to be honest. I don't want to go long on multiple currencies. So I have a top pick for the yen, I have a top pick for the dollar, and then I would really like to get in the NASDAQ, but it is just running away without me. So I was looking at this level, for example, this level of support, which we almost hit but didn't. And now we moved away from that. So I'm looking at this level of support. This is kind of the new area for pullbacks. I don't want to buy here on this high. Hopefully we do get a little bit of a pullback, a little bit of a retrace, so that I can try to get in on a buy setup and take advantage of the NASDAQ. Because I do think it's going to go to the all-time highs, possibly in the next few weeks, next few months. I do think it's going to happen pretty soon. So very bullish on the NASDAQ and also on the DAX, which is even more powerful than the NASDAQ. It has touched this 20 EMA, so kind of broke out of the all-time highs, retested, and now it's continuing up. So actively looking for buy positions at this point right here. And that's kind of the exposure that I would like to have. So I have NJ, I'll have probably the pound dollar this week or the next week, and then the indices is something that I'm closely watching as well.
Yeah, it's the DAX chart that you mentioned is a sore subject for me as well, because that move down to, like, you can see how beautiful on the retest that reaction was, right? It was like you broke out, you retested it, and it was just a split second that it was there before it just rallied back higher. So I was watching it on stream at that time. I did not get into that trade. I did get the Russell long, which is also going well for me, but the DAX, like you said, just is so strong. It's past the all-time highs, which we talk a lot on the show about relative strength, and the DAX in terms of the indices definitely has that, right? It is very, very strong this year. In fact, outperforming many other indices at this time. So interesting stuff to say the least. Miko, I want to ask the same question to you. So I'm going to make a guess that all three of us think the pound dollar looks really good. It's a really strong chart. We talked about this, I think last week. We got that breakout that we were all looking to see if it would happen. It pulled back, and I was looking at this last night, and I decided, if it's down there in the morning, if we come down and test this area, I'll probably get long. Unfortunately, by the time I got to the desk this morning, it had already bounced from that level. But I'm curious, Miko, pound dollar or other charts on the US dollar, because you mentioned you have a bearish bias on the US dollar, which would, of course, suggest you think potentially that we go higher for things like pound dollar, euro dollar. Do you have any top chart ideas on the US dollar?
Yeah, so I agree. Pound USD looks really good. Momentum looks really good. Market structure looks good. It ticks a lot of boxes. And of course, trading above that level of resistance, which he broke through last week as well. So pound looks really good. I feel like I kind of missed the boat on that one as well. We're very close to the high. So that's kind of why I prefer USD CAD, because I think I still got an opportunity to get involved. I do think most USD pairs will probably be stronger than the dollar. So I'm actually just looking to trade that direction. Mostly, I think NZD USD is one that is interesting as well. It's kind of just consolidating right now. So if we can see a bit of a breakout similar to pound USD last week, where we had that really nice explosion at the end of the week, I think there's some really nice retest opportunities, and there's room to the upside for this to move into. So I think there could be a decent trade there, especially if NZD becomes strong as well and maintains that strength. I feel like a break and retest opportunity above this level, 0.602, could provide some nice longs as well. But yeah, waiting for the break to really confirm that. Euro USD, I'm pretty bullish with that one as well. I don't think the setup looks as crystal clear as like pound USD does. So I'm not as optimistic to trade this one, but I think, again, we are likely to push back to the highs here. I think the dollar's still got room to fall. So my expectation is still more upside for euro. I don't really see a setup to trade it, but I like dollar CAD and NZD USD.
I like it. I have something to add to the currency conversation just for a second in terms of the economic data. So recently, this has been quickly one of the most popular charts on the Edge Finder here recently especially for our FX traders, for a really interesting reason. So this is not necessarily a price action based strength meter. It is a economic data based strength meter. And it is very popular with our users, because what it basically does here is we can look at currencies. We've all just talked about how it's interesting how, like, the New Zealand dollar, the chart looks really good, and so do the fundamentals, right? So we have the British pound and the New Zealand dollar. This doesn't necessarily mean that their economies are just the best economies. It means that relative to the expectations put out by the analyst community, right? Whenever we see like NFP, the forecast is this, and then the actual number, we compare those two numbers in the Edge Finder very closely. Well, what this is showing us is that in terms of the economic data reports that our system monitors, your strong kind of currencies here in terms of recent economic performance would be the British pound, which all three of us have been talking about, the New Zealand dollar, and also the close neighbor of the New Zealand dollar, the Australian dollar. And then on the flip side of things, we could see the more clearly bearish ones would be the euro and the Japanese yen, which I think is why, Marco, when you mentioned the kind of thing that you saw on the Edge Finder with New Zealand dollar versus Japanese yen, you can see that divergence, right? There's that divergence in economic data. So that's the cool kind of concept here with just incorporating a little bit of that comparative analysis. And then we also see it oftentimes. That's why I love these streams, is because we take that concept and then all three of us look at the technicals and we look at the charts and say, is it actually cooperating and moving nicely? So our neutral readings would be the Canadian dollar and the US dollar at this time, but we have a lot of data coming around the corner for the US, which could also shift it one way or the other. So we'll have to keep a close eye on that. Miko, I want to come right back to you really quick on the metals too, because silver has been interesting. Silver's got a little bit of a hold up going. What do you think on these? Are you paying any attention to metals right now, or are these just way too choppy?
Yeah, a little bit more on the choppy side of things. Silver, I think this is kind of like just getting ready for a big breakout, really. We've been sideways for quite a while, but I do think price is still likely to push back to the highs here at 35. So I think if maybe I can see price clear resistance here, that could probably open up an opportunity for a break and retest, and that could interest me. But right now we're pretty flat, still respecting resistance. We could still potentially roll over here, so that doesn't really motivate me to look for any buys at the moment. But I am very bullish on this one. I do think we were likely to eventually clear 35. I think if we go and do that, actually, the buys afterwards might be quite clear cut at that point, because you probably have a clear trend there. In terms of gold, gold again, I was hoping we could actually have a bigger sell-off for gold back into support. I'm looking at gold, we're kind of moving in this channel, so to speak. So I was hoping we could push back into support and then pick up some longs there. If not, then I'm kind of waiting to see if gold does break to the upside here for a bullish bias. If gold does that and we clear highs here, then yeah, I think the likelihood of us getting back to the all-time highs at 3,500 are pretty high, so that would make me bullish as well, and perhaps there might be some breaking retest opportunities afterwards. But I'm not seeing any entries now as we trade within the channel. Break above that, same thing for silver. Break above the range we're in, then yes, I think there could be something there to follow. I'm kind of just waiting for them to make their move and then looking to follow momentum afterwards.
Sure. Same question to you, Marco. What are your thoughts on metals?
Yeah, so for me, silver is definitely in no man's land right here. So until we break out of this daily range, I would say I'm not interested at all. So gold looks much more interesting. But if silver does break out with a lot of momentum, I think there's a very good chance for silver to appreciate a lot compared to gold. So if we do break out, I'm definitely looking for buy setups on silver. Currently, though, gold does look more active, looks better. I just don't have the confluences that I need, such as the market environment being risk off. So currently, I'm looking at indices, so I'm risk on, and I don't really want to look at long setups on gold right now. If we do have some breakouts of key levels, let's say of this high or of this high right here, and we do get some good fundamental data, I may look for a buy setup for a little bit of a hedge on my possible buy positions on the indices. But for now, being patient, and I'm clearly seeing this sort of trend line form right here, which we're kind of struggling to break out of. So yeah, my current focus is not the metals, but I do have some alerts on silver, and then on gold, I'm looking for a break of the high and for a shift in the macro environment.
Sure. And just to add to our conversation, as you were just discussing, Marco, about like risk on, risk off, you guys know I love to show this chart, the Bitcoin to gold ratio chart, which we can pull up here. So if I'm looking at the Bitcoin to gold ratio chart, we can see this thing continues to kind of trend higher, suggesting that people are buying Bitcoin more aggressively than they're buying gold, at least at this time. The other thing I wanted to just bring to our attention, we always talk about this. This is the gold to silver ratio, which is always a fun one to look at. Still showing gold priced very richly in relation to silver. The way to read this is essentially to say how many ounces of silver would it take to buy an ounce of gold. And right now it's hovering around 99 to 100, which is very, very expensive on a relative basis, one to the other. So gold has had this really good run. And I do think that, as you kind of discussed, Marco, that potential energy of silver could be really interesting to see if you get kind of a collapse back the other direction, which would actually probably happen, Miko, on the breakouts that you discussed. Like if you get those breakouts, like those true breaks to all-time highs, silver, I would imagine, has a catch-up trade coming for it at some point. It's just very hard to time, because to be honest, I was actually surprised that we had this massive gold run. If you had only showed me this chart a couple of years ago, like that's what's going to happen in gold, I would have said silver is going to be a beast. And silver has been a beast, but not nearly as much of a beast as I would have expected. I would have expected like, let's just say this move is what percent? Let's say that's 100% move. I would have expected like 150, 175% move on silver, but just not quite getting the run. So we'll see. Those silver bulls will have to continue to kind of wait for their turn, I guess. Speaking of Bitcoin briefly, just curious what you guys' thoughts are on this. Miko, watching crypto, Bitcoin, do you use it as a sentiment gauge, trading it, watching it? What do you think?
Yeah, I mean, I keep up to date with Bitcoin because that's like the governor. If Bitcoin's doing well, other cryptos are doing well too, or most likely. So yeah, Bitcoin's still bullish. I like it. We cleared the all-time highs. Things are still looking pretty healthy there for me. So as long as we can keep that up, good. We are a little bit corrective. Bitcoin hasn't really steamed through the highs like it's done in the past, and that does worry me a little bit because we might kind of just grind to a halt maybe, but then we created the all-time highs, we've done our job, we can retrace now. But in terms of like a more kind of immediate term, the market is still really bullish. Higher highs, higher lows, trend still looks really good, momentum still looks good, so I would imagine we're likely to push to new highs pretty soon as well. And then a retracement is going to be likely, of course, at that point as well. We're not really having that sort of breakout, are we? So we might be looking at pullback sooner than expected, but as a whole, still looking relatively healthy. So still pretty bullish on Bitcoin for now.
Cool. Marco, same question to you. You mentioned being risk on. Do you have any strong opinions on Bitcoin?
Yeah, definitely. It is on my watch list. So I'm looking for buy setups right now. And we have broken out to all-time highs. Now pausing a little bit. Again, I've been trying to catch it. I've been trying to catch a buy setup on this whole move, just never got the opportunity. So I keep moving my support levels higher. The current support level that I'm thinking about is this one right here. Yes, we got a nice, let's say, retest of the breakout to all-time highs, but I would like to see a bit bigger pullback to, let's say, this level of support. So my alert is set. And at that point, I will be pretty happy to get in on a buy setup to go up. So this goes well with the NASDAQ long, with the DAX long, and with the overall risk on environment, which I currently do believe we definitely must exploit. I mean, it's not often that you get a crash of 20% on the S&P and then a pullback all the way back up. So when you get this sort of volatility, you should act quickly. You should try to get in, especially on this correction to the upside or this push to the upside, because usually, yes, you do get a nice uptrend, but not such a rapid one, not such a clean one, and not such a prominent risk on setup where even the DAX is flying like it is right now. So
Yeah, I think what's also worth mentioning for all three of us, whether it be stocks or crypto or things like that, there's also these moments in time, and they are rare, where you get these like huge corrections and like panic sells in cryptocurrencies, in stocks and indices, things like that. There is a different playbook for me personally in those environments. Like when the market is just kind of trending higher, it's a different environment that I trade than when it's happening where it's like you're dropping like crazy. When it's trending higher, I'm looking for pullback buys, and I'm looking to put a tight stop, and I'm looking to kind of trail it and try and see how long I can let it run. But in giant corrections, we've all talked about this, I know, with Bitcoin, which we all kind of have like this idea of like you should maybe consider, depending on your risk tolerance, not financial advice, maybe look at Bitcoin when it's down a lot and say like, if you're going to buy it, you probably want to buy it when it's forgotten about, not when everybody is Marco gives us the grandma indicator, right? When everybody's talking about Bitcoin, we want to be careful about it. But same thing with stocks for me. Like when stocks like absolutely panic sell, I'm not buying it with a tight stop. I'm looking at companies that I really like. I look at individual companies. I went shopping this year with a lot of companies that I liked because I fundamentally believe that yes, this tariff trauma stuff is scary and it could get worse in the short run. And I don't know where the bottom is, but I do know that I like these companies through thick and thin. And so I added to a lot of shares during that time. Same thing with crypto. If you believe in crypto for the full, for the long term, huge sell-offs, it's a different playbook. But if you're really a believer in those things, that's the time in terms of like a longer term hold. But I think we kind of all have that thought process on crypto, that but it's two different environments. Very, very strange year so far, and now it seems like we're going kind of back towards that grindy, low volatility type of environment where we get this, VIX back down here. You can see it perfectly aligns. When you get VIX down here, markets trade a certain way. Markets trade very differently when you're seeing these like crazy spikes in volatility. So any other things you guys are watching? I'm trying to think if we hit most of our stuff here. We talked yen pairs, indices, commodities. What about oil? I know who it was, one of you guys. I think it was Miko that said he hates oil. So maybe we can talk about oil just to tease him.
That's Marco.
Is it your least favorite chart?
Yeah, it was pretty choppy each time I analyzed it on the live stream. Yeah.
Gotcha. Yeah. People always like, that's like me with certain charts too. Like people ask me like about a random currency pair, and I'm like, I never trade that, but I guess I'll look at it for you. So, to each their own. Actually, let me just ask you guys a theoretical question to respond to what we just discussed about like huge market sell-offs. Do you do anything differently in your market approach in like a crazy volatility spike like we saw this year? Miko, what do you think?
Not really. Because again, I mainly trade FX, so it's a different situation most of the time, because we do get those volatile environments from time to time. I think the biggest thing is just kind of wider stop losses, but I try to keep everything very very systematic, because I've traded through many different type of conditions now. I've back tested through different type of conditions. There's nothing inherently different that I need to do to my trading style when things become very volatile. Yeah, I mean, I probably would have bigger stop losses, probably bigger targets as well, just to compensate. But other than that, I keep things relatively simple. I don't alter my risk either. I just treat it almost like a normal environment, really.
Yeah, and FX world, obviously volatility does also impact it dramatically. Like charts move a whole lot more. But the beauty of FX, for me personally, what I love about FX is that there's so many options. And even when, you have a crazy world event, you can still pull up something like the Australian dollar against the Kiwi dollar, which I think this was your pair, Mika, that you said you didn't like, if I remember that correctly.
Yeah.
Personally, if you're trend following, this chart is a disaster. But for some of my dollar cost averaging stuff like that, I love this type of environment, because it's just ranging back and forth. So different currency pairs for different environments. We did obviously get some craziness here, but just different styles can still do okay in different market environments. That's the beauty of FX, is you have so many options on how you want to approach it. Marco, same thing to you. Do you buy some stuff for the long term when it's all going crazy? Do you change nothing? Do you size down? How do you approach like a super big spike in volatility in the market?
Yeah, so the first thing I do is I try to free up capital to buy some stocks and possibly buy some crypto as well, because you're getting a big discount, especially if you get in. I think for this crash, I got in 3 times. So I bought some S&P right here, and then I believe right here. Unfortunately, I didn't catch the bottom, but that's okay. So that's the first thing. So buying some long-term stocks, buying some crypto.
Marco, not to cut you off, but what do you trade? Do you trade ETFs? Do you trade index funds? Like what? Because I know for European listeners, that's a question they always have, is like, how can I trade those things for long term without paying swaps and commissions and all that?
Yeah, it's a bit of a pain in the butt. You need to do some research because you're limited if you're from Europe. But I use Interactive Brokers, and there's an ETF that copies the S&P 500. They take a little bit of a fee, so it's nothing much. The liquidity is good, so you can pretty much get filled on on a big position almost instantly. So it's not an issue, but you need to do some digging and you need to do a little bit of research. In the end, it can be done. And for crypto, I just buy it on Binance, transfer it to a ledger. That's it. I keep it on the hard wallet. In terms of trading, I'm a big believer in, let's say, being more aggressive when you get these times. So when you get these really nice uptrends, and if you're trading the indices, even if you're trading like dollar pairs, you could have definitely, or even gold, you could have definitely made some good money in this huge uptrend, in the huge crash of the dollar, or if you're trading just the indices or just stocks in this huge pump to the upside. So two things, probably making the stop loss bigger. And the second thing is throwing in a little bit more risk, because I do think when there's such an uncertainty in the markets, and then you get a huge crash, and then the market kind of dies down, and then you get the pump to the upside, this uptrend is like has a very high chance of continuing up without some massive pullbacks that will stop you out. So yeah, bigger stop loss, a little bit of a bigger risk. And that's, I think, a great recipe to take advantage of this. As I mentioned, this happens maybe, 1 in 5 years, 1 in 10 years that you get like a 20% pullback.
Yeah.
So definitely a good idea to exploit it. And I also have a question for you. So I know you're an investor, so you try to catch the drops, you try to buy the dips, but do you also allocate a bit of your, let's say, monthly income into the S&P each month, or do you just wait to buy the dips?
So I'm too arrogant to just passively buy. I want to add timing even to my investments. I know the traditional financial advice is don't try and time anything and all that. I still do. There are times where, as an investor, even though I do buy things for the long term, I don't really have anything that in my head I'm like, this is a forever buy, never touch it again concept. Everything for me is a trade with just maybe a longer term duration. So to answer that, I think all three of us kind of have this mentality. I want to ask Miko, and then we're going to move on to our next show segment. I got to let you guys go. I'm like very contrarian in the long term and very mean or very, very trend following in the short term. Like trades that I'm taking are all focused on like momentum, what's happening, trading the NASDAQ long if it's ripping higher. And then long term, I'm much more mean reversion and contrarian in my kind of investing / active trading long term, like position trading stuff. I'm curious, Mika, do you do anything long term? Because obviously we heard from Marco, from myself. Do you do anything long term? I know crypto you do a little bit. Is there any other stuff that you do kind of like we're talking about long term?
Not really, no. I keep my focus mainly on my trading, but I do like some of the smaller cryptos because, again, the risk is definitely worth the reward there.
Sure.
But no, I keep most of my focus on my trading. Again, I do like the idea of potentially buying in the season, holding for the long term, but I like my focus on my trading because my return could be greater there. So I just see, of course, in terms of diversification, I understand that, but I like having my eggs in my trading basket. So, but I do dabble in the crypto world though.
Well, what's something else to think about too, and the reason I asked that question is because even if all you do is trade, right? Great trading, in my opinion, is also like investing. Like if you have a long-term focus on your trading and you're active, even if you're taking trades every day, if you have a strategy, an edge, an approach in the markets, and that's how you choose to allocate your capital primarily, you still take a long-term approach to what you're doing, right? You're not like trying to make money by Friday, you're still trying to like long-term make money in your trading account. So even a good trading account is sort of like investing too, right? It's all kind of investing for the long term. So great stuff, guys. Thank you very much for joining me on the stream here today. Before we let you guys go, let me just remind everybody who's listening right now, if you have not already, make sure to go follow these guys on their own various YouTube channels. You can find Miko on his own channel, Miko Audu, and of course, Marco's Trading Journey on YouTube. Search them up. You can search their name. If you're watching on a TV, just pull it up on your phone. And if you're watching on a mobile device or a computer, we've got the links dropped here in the chat for you. click their links right here, subscribe to them, check out their free content. You guys, thank you very much for coming on this week.
Cheers.
Thank you. See you next week.
See you guys. All right, guys, up next, we've got the one and only Forex James coming back for another session. I'm going to jump on to a podcast here, so I'm going to let him go. But would love to ask him a little bit more about this. Well, actually, I'm sure he'll tell you guys about it. He's been watching the euro dollar a little bit. He's been doing some primarily FX trading, and listened to his segment yesterday. Great stuff. So stick around if you want to hear from Forex James. He's going to be taking over the show for a little bit. We'll also drop the link to his YouTube channel in case you want to check him out. Many of you guys, I'm sure, are very familiar with him. Definitely worth a subscription there as well. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. How's everyone doing? I hope you're all good. So, a lot of volatility this morning or today so far, especially on euro dollar. We've seen quite a large upside off here. We had some interesting news come out. I can't remember if it was last night or early this morning, but it was essentially about Trump, or I think it was a Manhattan court, basically tried to block or is blocking Trump's tariffs. Now, I've seen quite a lot of misconceptions about what that means. It doesn't have any effect whatsoever on tariffs themselves. It's more about the approach that Trump can take on tariffs. So it doesn't mean that there's no more tariffs. There's still completely a factor that we still need to think about. But what it does mean is that Trump can't just tweet and post on Truth Social, basically, 50% tariffs on Europe, 100% tariffs on China, blah, blah, blah. He can't really do that anymore. He's got to take a proper legal route about it. So that's basically it. It's not really changed too much. And it seems like there has been an appeal today, but I'm not sure about any updates regarding that just yet anyway. What else has there been? There's been some news today as well. We've had another negative GDP print. So previous was negative 0.3. Today came out negative 0.2. So that's not great. It's an improvement, but still not great. PCE came out 3.4 instead of the previous at 3.5. So that's, another contributor to the bearish dollar we've seen here. But as you guys know, or as you guys should know, if you watch my content often, of course, I'm fading this move on euro dollar. So I'm currently in short positions, DCAing back down to the short side. But that is it in terms of quick updates. Ball out, Lee, Cedric, Luneo. Good to see you all. Hope you're all good. Market manipulation. In my opinion, it's like Euro USD, Pound USD are sell for short term and NQ are long. Yeah, I don't mind that idea. Risk sentiment in the markets. Actually, let me just double check what it is now. But it's still risk on, cautious optimism. So we've got volatility and sentiment, sector rotation and ETF flows, Nvidia earnings beats, the courts blocking Trump's tariffs, and Fed policy uncertainty are the current contributors to the market sentiment at the moment. Seems like gold's picked up as well. We did see gold downside bounce off this 200 moving average beautifully right here. This would have been a pretty nice pickup, actually. I'm not necessarily super bullish on gold right now, so it wasn't something I wanted to do, but it did look like a nice buy in hindsight. Yeah, that's the situation. It wasn't really that major, to be honest. I think it was more of a very quick risk on move when we saw the dollar pump here on market open. We saw pretty aggressive moves, but yeah, it wasn't anything substantial, or it's definitely not led into anything. So yeah, pretty solid stuff. I mean, we can see markets at the moment have flipped back to risk off very temporarily, with the Swiss gaining quite pretty significant value. Obviously, it's against the dollar. The dollar's lost value as well, so it's not really a huge deal. I do expect a retracement here on a lot of these dollar crosses, as we typically do see on news events. We'll often see obviously the spike, the initial move, and then some sort of correction or reversal, which is why I'm short on euro dollar here. Cool. So how's everyone doing? How's your weeks going so far? For me, there's not really anything I'm looking at, to be honest with you. I'm pretty flat in terms of swing trades. I've been pretty uninvolved with swing trades for quite some time, actually. Just because there's so much market uncertainty, I don't feel comfortable putting positions on. So I'm quite happy, really, just sort of watch from the sidelines and pick up anything I can. So, just picking up the scraps if I see anything there. But yeah, the dollar's having a really, really bad time, actually. Euro's obviously benefited as well off the back of that typical capital flows at work. The dollar is still maintaining this sort of 89 to 90 zone, but is that going to continue to hold, and are we going to see a pickup? I don't know. To be honest, it's not looking very likely with the developments we've had today on the dollar. It's looking a bit brutal. The pound's doing very well at the moment as well, so that's something I'm considering picking up. Just a little bit of sterling. Let me pull up the edge finder. Hold on. Yeah, here. So we've still got very typical risk on readings here. Obviously, Dow, the S&P, Nasdaq, Russell, pound yen long. I quite like pound yen. I think if I was going to buy pound, I think pound yen is probably one of the better options. I'm still bullish on the yen long term. However, short term, I think taking short positions is quite wise. So I think something like this may be the play. So we look for this 200 moving average, come and intersect with price here, come and meet with previous structure around this area, and then potentially head higher from there. I think that's the only option I've got. I don't see another setup at all here, actually. James hasn't felt the same since he's been back from Bangkok. I know, I've got the holiday blues. It's just the weather here, man. It's just, when it makes such a big difference just having some heat and some sun. Jet lag? No, not jet lagged. I didn't go that far away. I was still in Europe. But yeah, it's more, I think, I don't know, I'm just tired, I think. $106.7 EU. Oh, no, you mean the index? I think it's going to, wait, what was that? 1067. Potentially, I still think the euro has room to come down. I still think it's a little bit overvalued. The problem is, I've been saying I think euro dollar is overvalued for a couple of, sort of the past 2 to 3 weeks. And it's easy for me to sit here and say it's overvalued. But if the market's not reflecting that, then it's pointless. And at the moment, the market isn't reflecting that. But it's still stuck sideways. In the grand scheme of things, it hasn't done anything really since the 11th of April. So all we really need is a catalyst to bring back the dollar bulls. And I think we are going to see, I'm not going to say a collapse, but I think we are going to see some significant downside on euro dollar to come. But again, that's going to require a catalyst. I'm not saying that's just going to happen for whatever reason. Can I look at wheat? You have to tell me what the ticker is for wheat. I got no idea what. Oh, okay. We'll just search wheat then. But also, I've got no idea what the fundamentals are for wheat. With agricultural commodities, I don't do this anymore, but I used to really like looking at seasonality because it's generally a lot more helpful to look at seasonality for things like agricultural commodities compared to things like FX. with FX, seasonality is not that useful because obviously it doesn't take into account a lot of the market drivers. Whereas seasonality, when you're looking at what causes a lot of supply and demand for things like wheat, cocoa, coffee, things like that, obviously the weather cycles come into play quite heavily. So anyway, get back on track. The only thing I really see here is obviously these lows. So support, sorry, ball out. I know you don't like that word, but I'm going to call it support. But yeah, other than that, there's not really anything here. It's been very clearly, again, when's this from? Very heavily sold off since 2022. I'm going to be honest. I see nothing on a technical basis here. So if there's a fundamental reason for it, let me know. But yeah, I've got no idea. It's going to 1.19. Very well could do. South of England usually has beautiful weather more than the north. Yeah, it does, absolutely. Lean hogs, OT, relax yourself. Yeah, 40. No, I wouldn't be able to survive in 40-degree heat. I struggled in Australia, and I think Australia peaked at 33, 34 when I was there. That was too much. I got really, really bad sunburn out there. Anyway, right. You know, I'm not checking orange juice now. Euro pound still getting a reading of -10. I'd still, you know what? This may be the opportunity actually to go short euro pound. I'd be quite happy actually to just get into an initial sell position here and just build up some shorts into this 200 moving average. If we manage to break back above this resistance and hold, then I'd cut the position and start reallocating at higher prices. But I do really like it. Euro pound, I mean, I say this on pretty much every stream. So I'm sorry if I sound like a broken record, but it's just such a beautiful market for mean reversions. So it's very, very predictable. At some point, we get these really aggressive upside spikes like we've had here. Eventually, we then continue back to the downside and lower than the initial low of the spike. So it can be good, but it can be very, very rough to be in at the time. I think Nick and I were stuck in a DCA on euro pound at the same time at one point. I can't remember when it was. It might have been back here. But at the time, it felt a bit rough. And I was sat there for about a month in drawdown on euro pound. It was difficult. Max allocated. Wait, hold on. What's your max allocated floating loss for DCA? My actual max, I made a video on my DCA strategy, and I said it was 2.5, which was a slight lie because it's actually higher than that. I allocate about 5% max drawdown. If 5% is met, I will cut the whole thing and reevaluate. 2.5 is where I start being a lot more cautious. But max is 5. You don't know if you agree with DCA and currencies? Why not? I don't see the benefit. Yeah. It depends. I mean, for me, it works out very well. It actually fits my life and personality a lot better to DCA. But it's not for everyone. I mean, you've got it takes, or it is essentially a completely different way of trading, because really you're kind of counter trend trading. Because obviously if you're a DCA trader and you're selling this, you are obviously counter trading the trend, which obviously most people don't really like to do it in any way. Most people don't like to add to losing trades. It requires a lot of management. So if you are emotionally attached to positions, which obviously you shouldn't be if you're trading, but you know, most people do get attached. So to be able to cut this position and then re-add in when you're still in drawdown, it takes a lot of discipline. So yeah, it's not for everyone, which is completely fine. But I love it. On TradingView, how do you scroll up and right and down? My TradingView doesn't give me much room to scroll and manipulate charts. I have no idea. Mine just lets me do it. yeah, I don't know. I don't think I've done anything to allow me to do that. It does need big cap. That's another downside to actually make money DCAing, or to make money that's sort of worth making. Yeah, you kind of need to have like at least 10 to 15,000, and that's like minimum. And also obviously for margin requirements. As for the bankers thing, I'm going to be honest. I don't care what bankers think. They're the guys that underperform the S&P consistently. So if they don't do something, it doesn't mean it's good or bad, in my view. But also, they do build into positions. They don't DCA like I do. I'm not saying that they're going to sit here on euro pound selling. They will say, okay, well, we might be bearish on euro pound, so I'm going to sell here. Maybe we'll allocate another position up here, and then maybe that's it. Or maybe they'll have one more here. They're less aggressive, but they do, in theory, DCA. What don't you like about DCA? It's uncertain. So I guess the downside for me is, let's say I bought euro pound here. Actually, sorry, that's a wrong example. Let's say I was selling euro pound here. I know that my stop is here. It cannot go any worse unless I'm get slipped or something weird happens, but generally I'm completely fine. That's the risk. That's what it is. And I'm stopped if it goes wrong. Whereas the problem with DCA is, although, yes, you can manage positions, I have no idea how long this is going to go on for. If I'm selling this move, I might have to continue taking losses and adding in and taking losses. Like I said earlier, I did it for a month on euro pound, and that was tough mentally. So that's sort of the downside, is it in theory can run on forever. I mean, it wouldn't, but theoretically it could. Yeah, Bola, that's true. Okay. Yeah, banks actually don't do that. Well, sorry, institutional traders are on the floor. They don't actually trade that much anymore. I think last time I heard it was about 10% of their entire workload is actually trading. The rest of it is just corporate stuff. It's a lot of sales these days. Lee, yeah, Nick made a video actually. I posted mine, then I think Nick posted one like the day after. I'm not sure if it was just great timing or if Nick is a bit of a copycat. Oh, I'm joking. But yeah, me and Nick posted one pretty much around the same time. I think Nick's is a bit more comprehensive than mine, to be fair, though. So I think Nick's would probably give you a bit more value. Because mine was focused purely on shorting euro dollar and showing how I do it, whereas Nick gives you more of an understanding of how you would be able to adapt it to different markets and sort of do it yourself. Any reaction videos come in? Not on YouTube. No, I've kind of stopped doing those. I do them on Instagram now. I do reaction reels. Been DCAing gold short since 2012. 2012. Can't wait to make some profit. Yeah, well, as I said yesterday, there is a guy that's been DCAing short gold since 2700. And it's the same guy that I think a few people in the industry have had problems with before. So that makes me smile. Karma comes around. A trade turned lousy investment. Yeah, I remember that happened to me a couple of times when I was starting out. I'd take a trade and it would somehow turn into a position trade or an investment. I can't cut it yet. I'm not going to cut it. I'll hold it. It might turn around, and then 2 months later, I'm still in the position. No, he does. I don't think he does feel stupid. His ego is through the roof. But anyway, not going to go into that. If you've been shorting gold because you betted on an apocalypse, you're still on the wrong side. And to be fair, it doesn't matter. Even if you were on the right side, exchanges, brokers, they won't be honoring your withdrawal at that point. I think they'd be more concerned about trying to find some toilet roll and shelter. Seems like the markets are running out of a little bit of steam now from the news, which is lovely. Love to see that. Might be able to make some money this week. Well, I should say that. Might be able to make some money to end the month, is what I'm trying to mean. So I've been, actually, you know, this is the chart to show you. So I shorted right here, I shorted here, shorted here, I shorted right at the top here. So my average price is currently around here, roughly. So I just need to come all the way back down to parity, and I'll be a very happy boy. GU's looking tempting. What for, Anthony? Sorry, I've still got a scratchy throat. I'm trying not to cough that much today, but it's a bit tricky. I got a broker that has 0 commissions. My broker has, well, my account with my broker has 0 commissions, but I still have swaps and spreads. Most brokers have 2 options. You'll have raw, which is commissions and very low spreads, razor spreads, or you'll have standard, and standard is higher spreads but no commission. But you'll have to pay swaps on both. But if you find a broker that charges nothing, with no spreads, no commissions, no swaps, let me know. Yeah, when he decides to reverse and finally starts buying, and it dumps down to 2,700 again. That'll be funny. Yeah, go for it, Leo. I'd appreciate the view. Give me that 2 cents ad revenue. Thank you very much. Yeah, OT, I think those ones are for religious purposes, I think, because I from what I understand, I think in the Muslim faith, the problem with trading is having to pay spreads or pay commissions. I'm not 100% sure. I'm not well educated in that area, but I think that's what it was initially developed for. It's like with Jewish people, they can get interest-free loans or something. Again, don't quote me. I'm not 100% sure on the details, but I know there's certain ways around things. Yeah, the broker's not honoring that withdrawal. I'm short euro dollar. Seems to have a lot of correction downside left. Yes, I do agree with that. But the fact you're saying that makes me want to close my position, to be honest with you. Yeah, I've got a raw account on one account and another with no commissions and experience. Okay, makes sense. Yeah, Islamic account, I thought so. Oh, so it's the interest that's forbidden. I see. Anyway, okay. I'm not seeing too much actually that's peaking interest. I think the stock markets are still quite attractive. The DAX, I'm still interested in picking up the DAX if we can come back down into this support level. Sorry, ball out. All come into and fill this gap. I think either one of these two, whether it be here or here, I'd be quite happy to buy the DAX and sort of just hold it into new all-time highs. Trail stops, keep it simple. The only roadblock I've got, as I said when I first came on, the issue I'm facing is just the uncertainty in the markets. I'm just a little bit reluctant to start looking actively and placing swing trades because anything can happen. I'm just not really willing to put much on, but I'd be willing to take one or two, maybe. So if we can come down on the NAS to this 0.5 level, again, I'd be quite happy to buy and hold, possibly just into this fib extension though on NAS. But yeah, we'll see. See you later, Dragon. Would you say you see UJ longs? Honestly, not CJ. I was very tempted last week. It looked really good. The thing is with UJ, we've already got MUFG, MUFG Research, which is an institution, are short dollar yen. I've not seen any optimism around dollar yen longs, and I am still bullish on the yen. Short term, yes, you might be able to get something maybe back into recent highs. However, for a swing trade, if we did see that, let's say we came back into this high, I'd be quite happy actually to then start going short. And this would also help offset some of my dollar long ideas. But yeah, I'm just not super confident on dollar yen. Just change terminology from support to liquidation. Well, Bollock, we agree on the UJ idea then. You know what we should do? We should all just mutually agree to come up with totally new terms for exactly the same thing. So we have a support which come up with a completely new complex name, and we do the same for everything, like trend lines, supports, resistance, RSIs, and then we all make a course and just sell it for like $500 each. And we just shame anyone that doesn't trade the same way. And there you go. We've made a cult and we all print money. Okay. Just trying to see what else there is. The Russell. Let's have a look at the Russell. Again, it's not something I really pay any attention to, but it is hanging on with a score of 12, which is interesting. I just realized Dow's got I don't think I've ever seen the Edge Finder have a score of 17. I think this is the first time I've seen that. So I'm gonna have a look at the Dow as well in a second. The thing is with the Russell, I don't really know what's driving it. I know it's small cap companies, but the fact the Fed's holding rates, I mean, lower PCE, maybe that would have been a nice little benefit, but yeah, I don't know. Not convinced on the Russell, to be honest. What was the thing I was talking about? The Dow. So Dow's got a score of 17. So what can we try and get into here? So the 200's coming down. Coming up nicely. Let's see if we've got fib here as well. We do. So I actually really like this level. So this might be one for the watch list. Take an entry here. We look for a long position of that. Take profit doesn't really matter. I'd be happy to trail stops and just let it run. Stop loss. I suppose there's two options here. Below the at the wick here, which is a little bit conservative. It kind of hurts the R&R significantly. Or we would be a little bit more aggressive, just put it below the lows and just below this 200. And that would give us a bit of a higher R&R, but obviously less breathing room for the market. I suppose another slight concern you could argue here is that this is technically a lower high from the previous high here, but it is overall moving to the upside short term. So they might be one to pay attention to. Oh, wait, hold on. I missed some messages here. ICT 2.0. Did everyone catch how Elon formed Doge to shoot his share price down and then go back to focus on Tesla? Can't wait to see the report how much shares he rebought. You know what, Baller? I didn't even think about that. That is a very good point, though. So 1 minute movement to the downside. Don't worry, Betterman. AU will be at 0.5 in no time. Oh, Bull, I already said that. Just took my TP on NQ long and pound dollar TP short. Very nice. Congratulations. It's a good way to end the week, or almost end the week, I guess. Well, China turns off New York Stock Exchange. Yeah, that would be a mess. What about ETFs for long term, like global or world ETF, diversified? I'm going to be honest. I've been in lots of different ETFs over the past couple of years. None of them impressed me. Like, they did well for an ETF, but in terms of, I found much better returns just buying the S&P. So I was in the FTSE Global All Cap. I've been in just I think it was a European only ETF. I've been in Asia ETF. All of them were actually very disappointing. I mean, I'll say that I was only in, I think I gave them all about 6 months, but yeah, it didn't really impress me enough to hold them or look into them anymore. Yeah, but I do agree. I think private investments really are the way to go. I've got a very small, I liquidated the majority of my S&P holdings actually not too long ago. I think it was last week. And that was to reallocate into private investments in different things. I think it's good to have some money in, general investments, public investments. But yeah, I've kind of gone away from those a little bit. You know what's funny, actually? I heard, I'm going to go a little bit of a side note here, but I'm not sure if it's true because I'm not that well versed in stock market things. But it was someone that was saying that a lot of the S&P volume is actually just made up by people investing into retirement funds and just making general investments. So when you take that and you also take into account that the older generation, so the people that are, sorry to sound morbid, but the people that are going to die next, the next generation to go, are the ones hoarding or have most of the wealth. So their money's getting taken out, and the money that's getting put in is much incredibly less than the money that's getting taken out. Is that going to cause a downside in the stock market? I don't know. Again, I'm not saying that is going to happen. I've got no idea. I heard it and I thought it was interesting, so I'm telling you. Thank you, Real Color. I appreciate it. Yeah. Yeah, we'll see. I mean, to be honest, it made sense. Like, I kind of get what he's saying, but I'm not sure if that would happen. So, let's go on the weekly here. So you've got retail investors, you've got, your mum and dad, your grandparents, just invest every month, just buy, autopilot, continuously buying. They're obviously the ones again, generalizing, but they're the ones earning a lot more money that are able to invest more. So when they start disappearing, they're going to be taking out that money, whether it goes to, inheritance or whatever it may be. That money gets liquidated. So the people that are now left investing, it's significantly less money going in. So is that going to start causing a downside? Again, I kind of just repeated that for no reason, but yeah, I've got really no idea, but it's thought-provoking. When's the next news event? Let me check. In fact, you know what? Nick or Chris Pulver might be able to give you some information on that idea. I don't know. So what have we got? We've got pending home sales in 7 minutes. We've got Fed Goolsbee speech in an hour. Another Fed speech at 7 p.m. UK time. We've got Bank of England at 8 p.m. UK time. That's pretty much it for today. Tomorrow, let me put this on screen. Tomorrow, we've actually got some pretty big news. So we've got harmonized index of consumer prices for Germany at 1 p.m. UK time. Canadian news, I don't trade Canadian dollar, so I'm not going to go over that. I've got GDP for Canada, though. We've got can't get my words out. Price index month on month, consumer consumption expenditures. God, my brain's going to jelly. So yeah, US news tomorrow is what I'm trying to say. And that's it. That will end the week on Friday. So yeah, tomorrow we're going to be ending the week with a little bit of volatility, hopefully. So that took me way too long to get through what news was coming. That's pennies. I think there is a stat, only 10% of American know what the stock market even is. Really? Surely not. Your average American at the end of the week takes his $500 paycheck and buys beer and then passes out on Monday. I know that's a stereotype, but I'm not sure if that's actually true. I don't know. I mean, it wouldn't surprise me. I don't really know anyone in like my old friend group or anything that invests in stocks. But I know a lot of people, in fact, pretty much everyone that I know that's in the older generation has money in the stock market, whether it be just passive investments, retirement funds, active investments. I don't know, but yeah. Yeah. I think it's just a lack of financial education, isn't there, really? But then I suppose the argument can be made if someone wanted to have the education, it's pretty readily available. You know, you don't need to be an expert to invest in the stock market. You can just every month put. In fact, you know, again, I'm going to tangent here. I'm sorry, I've run out of chart things to discuss, so I'm just talking about whatever comes to my head. There was a guy that I saw, and again, I think I saw this on Instagram Reels, so take it as you will. But it was a relatively old man. He was a janitor at a hospital or something, and he put $25 in the stock market every week, and he is now worth, I think it was like over 1.6 million. It's crazy, like the power of just compounding. But no one wants to have that, you know, $100 to start with in the stock market. No one wants a small amount there. Everyone wants to start with 10,000, 50,000, 100,000. So they get impatient. And that, you know, 5,000 they saved up over 10 years. Oh, well, not 10 years, but that 5,000 they saved up over, you know, 2 or 3 years. It's so easy to just say, oh, it's only 3,000. I'm going to withdraw it and go on holiday or whatever, or buy a new car. Gold's outperforming the S&P. That's very true. That's a great point, ball out. Actually, I think there is that middle ground, isn't there? Of where do you draw the line? Because I think it's imperative everyone has 100,000 as soon as possible, really, because that 100,000 is like when you can actually start earning significant money, or like relevant money that's actually going to benefit your life. But if you're having to stop everything, you have to basically pause everything you enjoy to get that 100,000. Is it really worth it? To me, yes, because I love money. I'm a bit of a I can't say that on stream, but yeah, I love money. So for me, it's fine. But you know, for the average person that's already struggling, I don't think it is. Or I don't think it's realistic to expect them to do, is what I'm trying to say. Yeah, we should all just become janitors and do that then. The S&P is at this 50%, actually at this 0.618 level. So it'd be interesting to see if we can start seeing some rejection here. I might take a position, see if we can get something here. Actually, I'll watch the 1 hour. So if this 1 hour candle, in fact, we've only got 2 minutes left, maybe not. If the next 1 hour candle can close bullish, I think I would take a long position here. I think it would have to just be a 1 to 2. I can't really justify having a tighter stop than this. And even this is a little bit tight for my liking. What income streams do I have? I've got trading. I've got elite traders. I have another company which I don't make public because it's a very niche company and it would be very easily saturated. So I keep that one very private. And I also have my other company that I'm gonna announce in August is actually bringing in A little bit. It's really not much. It brings in a little bit of money every here and there. But yeah, why have $1 million when you're 60? Yeah, I don't know. I mean, to be fair, the cost of retirement is rapidly increasing as well. So it's like that $1 million kind of sounds like a lot of money, but reality it's not. If you're retiring at 60 with $1 million, you can have a good life, I'm sure, but you're not going to be living like a millionaire, are you? US 500 on that 1 hour. I just did look at US 500 on 1 hour. So I'm looking at this fib level from low to high. If we can respect or stay within this fib level on the next 1 hour candle, obviously this one's about to close in 20 seconds, but it's too bearish. I don't like buying into bearish candles. So we can have a bullish candle on the next H1 that will engulf the previous one. Then yes, I may take a long position here. This is the S&P 500 alloy. Went to sleep 200 pips profit and woke up at break even. That's the problem. That's, you know, it's the trader's curse. It happens to everyone. I'm going to be, yeah, Betterment, you're right. That isn't, you know, from 60 to 100, you still got another 40 years, but you've also got to account for the quality of living. At 100, you're not going to be jumping on planes and yachts and popping champagne in the club, are you? You're going to be likely pretty immobile and in pain, I would assume. So, you know, my plan isn't to live until 100. I'd quite happily just call it a day. It's, you know, 75, 80. Probably won't see 60. Yeah, I don't know. I'm here for a good time, not a long time. Make as much money as possible, have as much fun as possible, and then I'll peace out. Thing is, I will always live forever because I'm on YouTube. Unless YouTube shuts down, then I'll probably be gone. But, you know, my videos will be there forever. So, you know, maybe in like 100 to 300 years, people look back at trading extremes and I'm like, wow, I actually learned a lot from that. And they'll see James. They'll be like, wow, it's a shame he's not alive anymore. And then, you know, might build from there. I'm joking, of course. Don't want to be popping champagnes and yachts at 30, even if I had the money. Yeah, no, neither do I. But you know what I'm trying to say. Hopefully you understand the point I'm trying to make. It's like you won't be in a position to enjoy the money. Whether you want to, you know, pop champagne or whether you want to go on private jet, whatever you want to do, at like 90 or 100, you're not really going to be in a position to do it. Can someone actually become a full-time trader? No. Well, yeah, of course you theoretically can, but realistically it's not likely. And it's not from a position of money or anything like that. You could have a lot of money and still struggle. Obviously there's a line, you know, if 1% of your account is enough to feed you for a year, 6 months, yes, theoretically, yes. So, but the problem that a lot of traders have, or a lot of people have, is they will look at traders that, oh, I want to be a full-time trader. I want to sit at home all day and watch the charts and you know, go on private jets and go and live in Dubai. Realistically, you're not going to do it, because even if you have, you know, 200, 500,000 in capital, yes, you're going to make good money, but you're also going to lose a lot more money, or lose money, should I say. So yeah, you know, it's tough to be a full-time trader because you got all of those worries from a 9 to 5. You know your paycheck, you know what you're going to get, you know the bills are accounted for regardless. Whereas trading, it's like, oh my god, if I have lost 5% this month, it's been a terrible month, I've lost 5%, I'm going to either have to use savings or I'm going to have to withdraw from my capital to pay my bills. It's mentally draining. I would not recommend being a full-time trader. I think the best route to do is to become a part-time trader and have something else on the side. So whether it be something like A1 trading or elite traders or a completely different business, I think it's imperative. Because if you are putting that type of stress on yourself when you're trading, you're just going to perform even worse. My granddad's 88, still goes to the gym. Yeah, I agree with Bola. I think he is in a top percentile of that age. My granddad is 80. I think he's 87, 86, 87. He used to be a gymnastics. I don't know what the word is for that, actually. He used to do gymnastics. But he can barely move now. He's got like severe back problems and things. Look at NQ. Yep. Similar thing. If we can have, actually, I suppose. Oops. What time is it? Oh, got about 10 minutes left. I don't really see a valid fib here, to be honest. There is one here, but it looks like it's about to get slapped. So I think the other entry would be something like this. So if we can come down 50% retracement on this low to this high, meet this 200 moving average, then continue higher, that would probably be the only play I would consider on NASDAQ right now. Oh yeah, I did see the Tate news. Yeah, he's been charged in the UK, hasn't he? For I think it's like 3 different things. I can't say them on YouTube, I don't think. But yeah, he's yeah, it's come raining down on him. In fact, them, I should say. Which I'll be honest, I don't really think is a bad thing. Yeah, I know it's quite a few, and to be honest, it's not light charges; they're serious charges. So I think there's an extradition from the UK, from Romania to the UK, but from what I heard, the issue is that they're in America and have not been extradited from America to the UK. So I think as long as they can just hide out in America, actually, they'll be okay. Ball out, I think, when someone's charged, though, doesn't that mean that it's done? Like they've already got the evidence and it's pretty much case closed. Oh, it doesn't. Okay. Yeah, I'm not very knowledgeable about law and police and things. In the hard James, you just have to have spending money to live for a year, and you're good to trade with zero headache. There is that, yes, but for a 20 to 30-year-old, excuse me, an average 20 to 30-year-old that works 9 to 5. Can you have enough capital? I'm talking personal capital, not talking about prop firms. Can you have enough can you save up enough personal capital and have 1 to 2 years of emergency money? Very unlikely, unless you've got an extremely high paying job or you've got, I don't know, something else going on. Yeah, anyway. Pound Swiss might be another one. I think we looked at Pound Swiss yesterday, actually, but I've not checked on it since. Yeah, so it is coming down, isn't it? So I think this may be an opportunity to buy Pound Swiss a little bit cheaper. Actually, it would be pretty much the same as what I discussed on the S&P and NASDAQ. It'd be a case of just waiting to see if this 200 moving average can act as a dynamic support. So then we could see something a bit like this. It's a very choppy market right now, but it's not always a bad thing. And if we do see a complete improvement in risk, in risk sentiment, could even look to target here around the 1.145 level. It'll be 1 to 5. That's not bad. It might be worth taking a shot, to be honest. Betterment, I could not have said that better, actually. Yeah. I know we live in a very dystopian society, actually. If you went back to like the 70s, 80s and showed them the things going on at the minute, they would be, I don't think they'd believe you, to be honest. But I think in reality, obviously I'm saying this with a certain level in mind, but why wouldn't you do OnlyFans? Like, obviously, certain people have different moral compasses, people have different beliefs, that's fine. But I personally, I think I would. Why not? If I'm going to get some sad, lonely simps to pay me, $100 for a video, best believe I'm going to be taking that money. It's better in my hands than theirs. Because if I don't take it, they'll just give it to someone else. Why is my screen quality so bad? Why is your internet so bad, Ben? Don't be a brokey. Get fiber optic or business internet so you can actually watch the streams in high quality. You'd subscribe to mine? Nice. Okay, well, Forex James OnlyFans opening next week. Just a quick disclaimer, though. It's only going to be pictures of my cat, the Quant. He might give you some signals here and there. James has no honor. True. It's full HD. No, but I was only joking. I forgot to say that. I wasn't trying to actually be rude. It's because this isn't a native stream for me. I'm like, it's like I'm like patching in, I think is the right word. This is a stream by Trader Nick and A1 Trading, which obviously in America. I'm streaming in from the UK, so it's not on my thing, if that makes sense. So yeah, you'll often see the guests' quality is lower than what Nick's quality is. You sound a bit too curious about that, real cooler. Okay. Yeah, nothing interesting here, to be honest with you. There's not really any changes. Momentum has definitely slowed down, but it's not really anything significant. Euro pound, I think, will probably be the next play I make. I really like the story for Euro pound. So I think if we can come into this 200, I will take a short position. And I might just build up a position if we can continue to climb higher. So we'll see. Anyway, I've got a couple of minutes left. So if there is any trading questions, let me know, because I don't want you guys to click on here, hear me talking about OnlyFans and old people, and think that we've got no value to provide. The producer must be laughing watching this convo from the sidelines. It must be really interesting working on the behind the scenes on this stream. Some of the things I see, and that's just from me watching the stream, some of the people and things they say makes me want to rip my hair out. It's like, in fact, I'm not. Yeah, never mind. New Zealand yen. I'm going to be honest. I've got no idea about the New Zealand dollar right now. Let me see if I can find anything. I know they just cut rates, so expected to cut rates again. Yen. Problem is, markets are not really being driven by typical fundamentals, which is why I'm finding it quite difficult to trade at the minute. A lot of the market moves are just purely based on tariffs and risk sentiment. So you've got two options really. I'm gonna tell you the markets go up or down. So either we have an escalation in tariffs and we see risk assets get sold off and an inflow into safe havens. So that would obviously drive yen stronger, New Zealand dollar weaker. Or we start seeing a continuation of the de-escalation. In that case, we might see likely we'll see the yen get sold off a little bit more, and we'll see the appeal for risk assets increase, so New Zealand dollar up. So to be honest with you, I've got no idea short term, but if you just watch the developments, it should give you a good idea. Mission accomplished. Nice job, guys. Purely from a technical view, however, I think it would be very sensible to look for longs, just continue this overall upside drift that we're seeing. Excuse me. But yeah, other than that, there's nothing there for me really. Oh, actually, we do have New Zealand yen, very bullish with a score of 11. So you could use that. So you could trend follow quite easily and just look for the next ideal buying position or ideal buying price. It's a two-way greet here. There's an outputs of education content and we provide free entertainment in the chat. That's true. I think that's why these streams work so well, because there's a good mix of everything. And it's very rare that you'll get someone that doesn't fit the vibe. I want to say that, I mean, you get very toxic people in the trading industry, but I don't really see them in like this community, which is nice. Swiss yen, I'm still here, still chilling. Nothing happened. I've said it many, many times, but the idea is to just keep building shorts. The next buying area is right here at these previous highs. I'm looking really for around 120 to get hit. That sounds like a really large target, and it kind of is, but Swiss yen has a lot going for it to continue down, to start moving down in the long term. We've got a complete divergence. We've got the SNB, so Swiss National Bank, that is really on track actually for negative rates. The Bank of Japan that is still on the path to normalization. They're very, very slow, which is normal, it's expected. So we might have headwinds in the meantime. But generally, the story for Swiss yen shorts is beautiful. So I'm happy to keep holding it and happy to keep selling as the opportunities arise. Gerald, no problem. I'll offer you a discount. I recognize that name, Igor. I think I might have been in the chat. I don't remember what that was about, though. Absolutely no idea. Anyway, Chris Pulver should... actually, let me just check. I'm not sure if it is Chris after me or what the situation is. Yes, it is Chris. So Chris should be here in a couple of minutes, maybe a bit less, to take over the show. Oh, he did, didn't he? Yeah, I know. It's fine though. I mean, to be honest, the way to look at all the trading people is like, if you start getting those types of people in the chat and in your comment section, you're doing something right, because hate generally only comes when you're doing something right, or if you're doing something very, very wrong. One of the two. Euro seems to be really doing well today. pound dollar go top. I've got no idea what you mean by go top. I'll be honest, Andre. Maybe give me a little bit more on what you actually want to hear, or what you mean. Yeah, Bank of England speech later today. I think it was 7 p.m. UK time. Let me check. 8 p.m. UK time. Yeah, that'll be interesting for the pound. I'm not sure, OT. I'll be completely honest. Yeah, I'm really not sure. The pulverizer is coming up. Yep. I'm just waiting to get the message, and I'll leave you, and he will take over. He's not here yet, though. How did you and A1 start working together? You know what? I have absolutely no idea. I remember I did a stream with on the A1 show a while ago. I didn't come back, and I think Nick messaged me, or I think someone messaged me to see if I'd come back on again, and then it sort of just turned into a schedule. I'm not 100% sure. I can't remember. It was a while ago. Betterman, I've got no idea. Could you please hold on? Could you please explain why US 30 down today? Yeah, hold on. Ball, of course I'll join your Discord. Okay, pull back unemployment data. Yeah, hold on. Let me have a look. Yeah, so the S&P is down. Let me just quickly review what actually came out today so I can give you an answer. So GDP popped up slightly. Jobless claims. Jobless claims came out quite poor actually, 240. Okay, so it seems like we're having a little bit of a rotation on risk. Generally speaking, risk sentiment is still bullish or risk on. However, the markets aren't really reflecting that. So if you look at the Swiss is up, yen's up, euro's up, dollar is down. So in turn, you're going to see stocks down. $500 a month, I'll make it back. Okay. Do I get a refund if I don't make it back? Does anyone know Nexus Pips? Never heard of that, no. Mark messages? I'm also not sure what you're talking about there, Betterman. Yes, OT, you can message me on Telegram. you can make $500 back guaranteed, but no guarantee in the T's and C's. Okay, I've got the message. It's time for me to love you and leave you. Chris Pulver will be coming to take over the show. Don't leave when I leave. Guys, have a great one. Thank you for being with me today. I'm not sure if I'm on tomorrow. I'm not normally on Fridays, but in the meantime, have a great weekend. I'll see you all very soon. Stay safe.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Thursday. So, market got all excited about some Nvidia, and here we are fading for the day. So, I still look back at these weekly candles on SPX, it's still a bunch of noise. So we've got this high here around 59, what is it, 59.60. 59.60 resistance and 57.70 support. That seems to be where the market is kind of stuck at this point in time. We'll see. End of the month is tomorrow. GDP numbers came in a little bit softer as expected. It was expected to be negative, so it came in negative 0.2. I love how that's green. We forecasted negative 0.3, came in 0.2. It's like, okay, great. Anyway, unemployment claims jumped a little bit. Home sales down, pretty big margin. And that's it. But I think that was kind of baked in. Nvidia earnings yesterday, like they beat once again. They did like a double EPS revision, which I thought was interesting. So for the day, we'll kind of keep an eye on things. Are we going to, take out some lows? I mean, it was kind of a wild move on Tuesday. So are we going to maintain this, gap at all, or is this going to be a gap fill? Actually, one way I might end up looking to trade this would be, could I do, like, are we going to fill this gap? Let me see something here. If we fill this gap, could I make some money on this trade? 58.05. Let me look at a trade right now. 58.05 going out to tomorrow. This would be a very cheap trade, 58.05. And if I went 10 wide, got this backwards. Let me see if I can get this thing filled for like 9. $9.80 maybe. See if I can risk $20. $9.80, no. $9.75. Okay. So this trade's out to tomorrow. What I'm doing in this one is I'm looking to see, this is a very inexpensive trade, but if we were to fill this gap at all tomorrow, my risk is going to be $25, and it's a huge profit trap of $975. So it's possible that if we head down this level, that this ends up trading for maybe a few $100 profit. So I'm not trying to, obviously I'd love to make $975, but realistically, even if I turn this into a trade that offers me, $100 to $200, I'd take the profit early if we ended up filling this gap. Okay. Otherwise, what I talked about in a morning session already was we clearly, came down kind of aggressively, looking for maybe for a gap fill here. I do have a broken wing butterfly at 58.75. So if price for the day is greater than 58.80, I'll keep my full 80 cents credit. If it's in between, so between 57.71 and 57.79, that potentially is my profit trap. So that'd be this piece of the trade. And if it's less than 57.60, then I'm taking on my risk. So we'd have to be basically filling this gap. We'd have to be filling this gap for me to take on the risk. If we, hold the lows from yesterday's close, that would be good. If the market is able to get back up to, intraday highs, that would be great. If we end up making any new highs, that would be great. But as a consolation, if we are going to fall and fill this like 58.05, 5800 gap, it's a very low risk, high reward trade. Probability is pretty slim, especially if price is going to go higher. I'm going to basically toss away 25 cents on the trade. Okay. All right. Let's take a look at a couple other things. Indecision. Look, I see indecision on the SPX and the Qs. Qs poked up a little bit higher because of Nvidia's influence, but we're still sideways with this 59.60 resistance and 57.70 support on the SPX. If you take a look at the NASDAQ right here, we're not closing higher. This is around a 21.450. So 21.450 resistance. Obviously, it's a little bit messier with the wicks. It's not exactly indecisive, but the question is can we close higher? Are we going to close higher than these last couple weeks? If so, where's our level? 21,600, 21,800, all-time highs at 22,200. Okay, Qs, we're at 521. Are we going to get back to 540? Are we going to, fall back and fade? This, I mean, you can look, you can see this as easy as I can. There's a big level that's like, okay, are we going to all-time highs? Are we going to fill this gap? I mean, honestly, I think both are going to happen. It's just which happens first. Do we hit highs first and then fill the gap? Do we fill the gap first and then rebuild? Part of me thinks the market is just trying not to disrupt anything that's been like melt up, melt up, melt up, melt up, melt up, right? I do have a little bit of concern with this. If you saw this jumping around the news yesterday, like the taco talk, which is Trump always chickens out. That was the taco basically that was trending yesterday, and I think he's the type of president that would be willing to double down and prove that he's not going to chicken out, and so he could just say something like, "No, we'll go back and do 50% tariffs," and then the market hates it. We had a court ruling that that everything was deemed. Kind of unconstitutional with the way we rolled out tariffs as a way to fix the deficit. So anyway, there's still like that weird lingering drama of the stuff isn't done. These 90-day pauses is not done. Nothing's going to be inked. Not every country is going to line up and do deals in 90 days. It's just not going to happen. But the markets don't really care, So I'm just looking to see, where the markets hold on today and hold on for the rest of this week. Seasonality wise, the whole adage of saying sell in May, go away. What does that mean? Well, is everyone going to dump their stock positions and take profit in May and then watch like a June sell-off? Maybe. But typically June and July are still historically bullish. I look at it this way. If you look at the season, January to, I guess you can look at, I just call it the pre-summer push, right? So if you go into your Edge Finder tool, and you look at seasonality, typically what we have, let's go monthly for the S&P. Okay. Look at the the big improvement in May. It's like May is way up, just melt up, melt up, melt up. But the pre-summer push, this is why I call it the pre-summer push, because what starts out for the year as, okay, January, February, maybe some flows, March, April are usually known for some pullbacks, right? Sometimes it's in the last, like COVID, it was a February to March cycle. February to March has been a pullback. Okay. So if we have like a good December, a good January, usually February, March is pullback. But once we establish that February, March pullback, it's usually, bottoming out here in April, and then May, June, July, like August. That's usually a pretty good run for stocks. Because I think we started with this heavy pivot in April, April into May into June. I don't know if we carry this momentum all the way through the end of the summer. It's like unless there's just no sellers. But we obviously have some dramatic timelines here in July, because what happens in July between the holiday and our big first 90-day window pause, like that's done in July 9th or something. That's basically when the first 90-day pause is up. So what does that mean? Do we pause another 90 days? Do we have more negotiations? Do we see who's coming to negotiate with the U.S.? So I just think that there's a concern with what this whole tariff drama, trade war looks like going into the end of the summer. The Fed is not likely going to do anything rates wise until maybe September. So anyway, point is, like, this isn't done. And I think you can see this as clear as I can. We're close to all-time highs. It's probably easiest for the market just to keep grinding and melting up higher, right? But just don't be blindsided to the fact that something may cause this, right? I've been saying now for the last couple of weeks, it's like, I'd love a pullback to position for that move to the upside. But I do think that the pain trade is the upside, right? Like, I'm not shorting this market, but the pain trade is annoyingly, begrudgingly moving higher because you're not participating. And it feels like you're buying high, and yet you're getting rewarded for that, which is great. But I think it's on borrowed time until something else is going to, maybe give this market a reality check, and it's quite possible that we barely make new highs, and then the market spends some time back in the middle, and then we're wondering like, well, what is it going to do? Here's a high, here's a low. We're kind of fighting around in the middle. Maybe if that's all the year does, right? But it's not how these markets are built. Like large cap weighted, the big move in spending. If the U.S., I still say this, if the U.S. is not seeing job losses, and the Fed is not having to like step in and intervene and do something reactive to a terrible event, like a black swan anomaly or something along those lines, like we saw the regional bank crisis back in January 2023. Money supply is growing. Like all these things are still encouraging higher highs. It just seems a little, kind of unrealistic that we can just sustain incredibly higher highs. However, I will say this: take a look at the SPY. Go to a monthly time frame. Actually, you know what? Go to a yearly time frame. I've got another chart here that'll be a little bit cleaner. I call this one clean and fresh, and it's not clean and fresh anymore, but I'll go blank. Okay, look at the SPY. Okay. COVID. If you go 2019, COVID crash to 2021, I just want you to get a perspective of this move. Okay. So we had the open in 2019. That was after also a Fed pivot. We raised rates in 2018, crashed the market. The market crashed December and January 2018, and then the Fed immediately pivoted in 2019. So from this run right here, I'm not going to count the discount from the broadening pattern lows on COVID. That was down about 10% from the open. But from this opening candle in 2019 all the way through the point where we had the deleveraging at the beginning, this would have been the end of 2021. End of 2021, beginning of 2022, obviously the market started to top out. But I want you to put this in perspective with this move. This low to high run was 94%. Okay? And look at the behavior with COVID. We all know that COVID was a broadening pattern, right? And this market just kept going up, 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 up. Now, the difference between COVID and now is there's no real Fed accommodation like there was back in 2020. So I'm a little hesitant to be like, this is what 2025's candle is going to look like with having a big body of the upside. But I could see, since we have fought back so far to get positive for the year, I could see this market still giving us a green body candle, right? And then we have another run here, and a little more green. But, notice what happens. We have a little stretch, 3 candles sideways, 2 candles sideways, 3 candles big down year. If we finish the year positive, I think a bigger pullback is coming. So this market might spend as much time as it can just fighting tooth and nail to just stay positive. I just think inevitably we're going to have pullbacks, right? Like we're going to have pullbacks. It's pretty simple. But as the retail crowd has done very well this year, you buy in the dips. If you're buying the dips, you've been rewarded pretty nicely, right? All right. So here's what I'm watching intraday. As long as we can get back towards today's highs, that broken wing butterfly looks pretty good. Qs, fine. Pretty aggressive sell-off right out of the gates. Here's a look at Nvidia. Let me go back to SPX since I'm watching that trade this morning, right here, and then go to Nvidia. So gap up, it did exactly what we thought, which is going to be about an $8 to $9 move, and it was exactly that. I did not get filled on the broken wing butterfly that I wanted. I don't think it was even offered up. So my Nvidia trade is, it's not going to fill. So this trade, I tried to play the bigger than expected move, trying to pin this thing at the top. Didn't trade. So it's not going to work. No big deal. So trade won't fill. It'll just cancel. That's fine. But on a positive note, my collar trades at 130 this week. Here's what I'm going to look at today. American Airlines, Amazon. So I've got some profits rolling in. So I have some puts on AAL. I have some ratio spreads on Amazon. I do have some naked puts on BTI. I do have some naked puts and 111 on the Dow. On JD, I need to add some covered calls. And NCLH, I need to add to my diagonal spread. Nvidia, I need to look at my collar, which is a 130. It's out to July, so I don't really have to do much on this one. But then I have some puts as well that are in profit. So Nvidia with the puts, I want to see what this did because of opening today. So let's go Nvidia here. So I have some shares. There's my collar trade. My naked put is up around 78%. So I mean, I could just take the profit. I mean, I don't want to wait. I'm not going to wait all the way to December. But taking about 70% of the profit, grabbing $270, it's okay. I mean, I can hold off and say like, I'm going to grab an extra $70. It's like, I mean, it adds up. $70 on 4 accounts. It's $280. But I could also just take this, get the buying power back, and then add more. So I mean, that's way down there. I was actually surprised it's not higher than 78%. So I'll keep an eye on that one for now. I mentioned JD. I need to sell some covered calls on JD. Bitcoin, I might not have to roll my call. If it doesn't get called away tomorrow at 61, then I don't have to roll it. That's good. How's my put doing, by the way? I bought some puts. The $45 put. Yeah, so I bought a put here, not in profit yet. Not in profit yet. Okay, so I'm watching those. Google, fine. Amazon ratio spreads up about 600 bucks. Those are out to June. So getting better. All right, this one might be worth closing. I'm up about 91% of my max credit here. So max profit's 206. I'm up $188. Let me see if I can close this thing down. That would be 103 closing for 10 cents. See if I can close this thing for 8. No more than 10 cents for this close, hopefully. So that'd be 93 cents in 2 contracts. It'd be 186 profit. Let's go 10 cents. Okay, 10 cent fill. I'm going to close out this ratio spread on Amazon for a winner. I'll update this in Pulver Alerts. So this is, so $1.03 was collected. I'm taking 93 cents profit. Okay, and if I have to, I'll just let this one marinate and sit on the weekend. So that account is pending. This one, let's put a pending close at 10 cents. Fill the 10 cents. We'll fill the other ones at 10 cents. What the heck? Okay. All right. So the June, I'm trying to close up the June ones. So pending. This one is at 10. I'll just bump it up to 11. That should fill at 11. Filled at 11. And this working order at 10, I'll go to 11. So I'm filling at 10 cents and 11 cents. Filled. Okay. So the June 20th ratio spread is closing for profit. That was a $1.03. So $1.03 closed for 10 cents, keeping 90+% of that credit. So 93 out of 103, keeping 90.2% of that profit. Good. And then the other ones that I have are out to December, so I'll let those continue to work. Okay, what else? So Amazon, that one's off the list now. AAL. Got some puts. I might just close these down. So max profits around 175. June, July. I don't think I have to do anything here, but the longer I wait, it's just more potential exposure. So I might just close these down and move on. I don't really want any airlines in the mix. I've already been burned by holding JetBlue like a fool. JetBlue and Spirit were supposed to merge, and I sat in JetBlue for a while and never got paid. So I'm sitting on that for a while. All right, so I'll close that one down. BTI, naked put combo up about 76%. This one I don't mind taking shares of. We're trading way above it. This is like a low beta stock, non-correlated. Same thing with MO, naked put here for $850. There's a long ways to go. This one out for the end of the year. Okay. Anyway, let's keep going top down. Hanging out today with a little lackluster performance. Hopefully we're not going too much lower. I'd like to see what that broke wing butterfly is going to do for me on the day. Let me double check my SPX here. So this is a call fly. And then we have the iron. There we go. So I'm trying to figure out what that was. Group. A low risk iron fly. Okay, so I'm watching this one for today. See if I can turn this into $80. If we go higher, looking for a call fly. Got between SPX and SPY, have some levels in here. So the 602, 600, 598. Uh, 593, 5 and 7. Okay, just getting those organized. All right, let's go dollar, gold, silver, oil, currency strength. Dollar taking a hit today, euro on the rise. See where my euro dollar position is right now. Back up into profit. So the 1180 is my buy trade. Back up around 170 pips or so. About 170 pips. Looking to see if we get back into 1550, I think. 1500, 1550 is my take profit. So if we're going to retest this high, it's the same as the dollar index retesting the low. I wouldn't be aggressively selling below the lows. I really wouldn't. I mean, if this gets back down to the lows, I would be taking profit on anything dollar index related. I think I did have an opportunity on my Aussie CAD to get a dip. So hopefully I'm getting some swing trades in here on Aussie CAD and New Zealand CAD. I mean, I like this level a lot. These trades, and again, why do I like these trades? Because they're boring and I'm not really worried about them. They'll find pivots, efficiencies. Like this is an inefficiency in my opinion that, I mean, I don't mind just taking a trade in here. 1, taking a swing trade at like a 50618 pullback. 2, taking a trade at the lows. 3, and letting this thing, like, I can lose, I can win, and make money on the trade. Like Aussie CAD, New Zealand CAD, I never mind dollar cost averaging into those currencies because they tend to not trend. Okay. Japanese yen, would never want to do that. Dollar basket when it's trending, would never want to do that. So, it's like this is what years of trading Forex has taught me is there are certain currency pairs that behave very efficiently, and those are some of my favorites because I trade the crap out of them when they don't really trend. If they do, like, look, they'll trend like, oh my gosh, this thing went up 700 pips. Right, but then what did it do? It proceeded to fall back about 70 to 80% of that. So the same thing is here. It's like I like the structure. I'm hoping that this will find a swing trade and head back up to the highs. If it falls lower, I'm still going to buy it here at this low, and I'm still going to buy it here at this low. And as long as I know my break even, I'll turn it into profit. Okay. All right. So let's go to some Swiss crosses here. Yen, press your luck on the yen. Aussie Swiss, still waiting to see if this will grind back up to the 200 moving average. Aussie New Zealand is falling lower. I'm looking to see if we can get filled. I want to get filled at 106 if possible. So I'm just holding a buy trade on Aussie New Zealand. Now I've actually got some positive swap on Aussie New Zealand, which is nice. But I'm willing to buy in some more at like 106 103, and parity, and just kind of ride this bigger range. Aussie dollar. I mean, how I don't know who's trying to trade this right now, but it's like, how much fun is this environment right now to trade Aussie dollar? It's not, so it's like if you're holding this thing small, right, and then be willing to kind of say, okay, trade 1, trade 2, maybe a deeper trade 3, stop loss below the swing. There's open space here that I think we'll get to. I mean, I think we'll see like the dollar rebalance a little bit, but probably continue to bounce between the lows around this like 98 handle, and maybe come back to parity. I mean, I don't know. It's like it's really important that the dollar doesn't get too much damage below 97. If we're doing that, then all of a sudden our U.S. bond market's going to be showing some frailty and some jeopardy as well. Like that's not a good thing. So I think this like parity handle is a big deal. And for years now, we've kind of settled in where it's like, okay, we tested, but we faked out. We tested, but we faked out. We obviously breached it. But is this also like, well, that's enough damage for the dollar? We're still going to be range bound. I don't know. I mean, I don't think there's too much to the downside here unless this is another like divergent level. And then all of a sudden the dollar puts in a bottom. So we will see. Meanwhile, oil, gold, silver. Oil is still right in the mix of sideways, floor at 55, ceiling at 65. Gold, I'm still going to wait. Lower highs for right now and lower lows for right now. And I'm hoping this will continue a little bit longer. So can we continue to like 3,000, maybe down to 2,900? I think for the dollar to make a move to the upside, that will bring gold lower. The equities markets have clearly moved higher. We've seen the Nasdaq go higher, the S&P move higher. This big melt up since the bottom on April 7th. But gold is clearly consolidating. I don't know if I would take the bait if gold is going to get back to the highs. I don't think that's a buy trade for me. I think it's still a wait and see. I think this might just be consolidation. So I'm just looking to kind of patiently map out some lows here and let my moving averages catch up and see if price will just find it. Right? If price finds these at levels, then I'll get into some gold futures, I'll get into some GLD, and I'll add more exposure. But I'm not chasing gold at highs other than holding the positions that I already have, which are fine. I'll hold them, but I'm not adding to them. Silver, repeating this a lot now, like, I like 29 if we pull back to that support level. I love silver if we break 35. If we break 35, get into the 40s, silver could be a really, really good trade. This could be a great catch-up trade with gold versus silver. If this gold-silver ratio ends up falling back down, I would like to see if silver price, the spot price, is above 35. If we're above 35 and we get into the 40s, silver gets pretty exciting. So something to watch. Bitcoin, overbought with divergence. I fully expect the technical pullback. I still think it's a chance to accumulate. I would still be adding more exposure in here and in here and even back at the lows. If all this is a range, it's going to be a little just disappointing to see a range trade. But also we could see the range of the markets, right? Maybe the market's not going to get all-time highs. Maybe the market's not going to get to the recent lows in April, but we have something sideways. Make sense? I mean, is it possible that the market is not going to make anything good? Like it's going to be a trader's market. If this is what 2025 looks like, it's going to be a trader's market. And maybe we're unclear. But having the markets pull back a little bit, I would say I'd welcome that. I mean, my gosh, like welcome a pullback here. Everyone's going to get nervous if the market starts to dump again. But I still think there's just so much good structural support in here that buyers would be interested. And again, I may not like buy immediately, but I will certainly be interested in positioning for option trades out of the way. I'll like intentionally position like 1-1-1 trades and ratio spreads at these lows because I don't think we're going to hit them necessarily. But I want to see a slight increase in volatility so I get more premiums. Yeah, but we'll see. So if this market just keeps going higher, then okay, cool, I guess. But I'd almost like to see a slightly lower high, and we can just have a wedge. This is a good trading environment to make some money. There's income trades galore in here. You know, you can sell a lot of covered calls. You can lower your cost basis. You can do a lot of things and help your portfolio, right? You're not just going to get crazy directional profits, but you can certainly, you know, option trade your way to a lot of income, which is likely what I'm going to do. Okay. All right. Where are we at for the day? Looking better. My broken wing on the day. Now showing a little bit of profit. Okay, good. I'm going to set this take profits. So 80 bucks is on the day. Let's see if I can go after that one. All right, I'll go after that. Chart was set at the highs. I've got SPY. I'm watching for a SPY 595 level, and I'm watching for a SPY 600. That's hopefully by tomorrow. For the week, I don't know if this market's like crazy high for the week, but it's mostly just that gap on Tuesday. From Friday to Tuesday, the market, you know, that's pretty much all the gains we've had for the week. So it'd be nice to see it sustained. I've got to sell a bunch of calls tomorrow, roll a bunch of calls. We've got some May 30th expirations I need to review for everybody here. So SPY, Bitcoin, the 61 call, Intel diagonal spread, Tesla rolling covered calls, TLT probably rolling again. I mean, I've got most of the profit on that one. I'm gonna roll this one again. IWM rolling that again. Snap, I've got to replace a collar trade. Futures is going to be down. That was a hedge that didn't pay. No big deal. Lyft, puts are worthless, but stock is up, you know, $3 a share. SLV. Okay, so my pressing expirations to this top like 8 symbols. That's going to be all action for today and tomorrow. All right, back to Bitcoin. Right, I was just mentioning Bitcoin like this. If we go sideways in Bitcoin, then I think we're going to also go sideways in the markets where we may not make new highs, right? But if all Bitcoin is doing is pulling back a little bit, you know, finding some efficiencies in here, and then we make all-time highs again, then sure. Like markets are going to make all-time highs, Bitcoin makes all-time highs, off we go. But I'm still going to be focused on accumulating. MicroStrategy pulled back. I'm still looking at this one's out to June for an income flip. Coinbase, I like to see some pullbacks. Ethereum, I'm not trading it. This would be the only trade I would take would be like an EETH or ETHA. Those are ETFs, but probably not my favorite on either one, to be honest. I'll just stick with Bitcoin for now. Copper. Are we getting a copper trade? Copper trade. All right. Making a couple bucks on this butterfly spread. This one is Swiss franc. We're looking at the Swiss franc. It's the inverse of the dollar Swiss. Japanese yen. Kind of a lot of volatility today on the Japanese yen. This is interesting. Swiss and Japanese yen. Weakest of the morning. Now they're making their way back up. Dollar was the strongest of the morning, making its way back down. I think that just kind of shows what your safe havens are for 2025. The dollar's not being treated like a safe haven. The Japanese yen and the Swiss franc are. Okay, so if the dollar is down, you're getting some euro gains. But yeah, I mean, safe haven is mostly flows with a Swiss and yen right now, which is why Swiss yen is probably my least favorite trade. If you're trying to trade something on Swiss yen, it's like they're pretty much in tandem. It makes it pretty challenging. Nikkei starting to make its way back up. Let's see what my EWJ is doing. Oh, come on now. Let's see some fresh highs on EWJ. Fresh highs. So this is the Nikkei with the bottom 15% taken out. So it's performed better than the broader Nikkei 225. I do have some exposure on EWJ right here. It's up around 2,500 bucks. DAX just off all-time highs. FTSE just off all-time highs. Just off all-time highs. China still sideways. Brazil above the 200 moving average. Latin America above the 200 moving average. I still like those trades. I'm still long on both. Mags up today on Nvidia. another one that, keep an eye on it. I could see this as a buying opportunity. We come back and maybe do a gap fill here. If we do a gap fill, it's like Mags could still play a pretty decent catch-up trade. I don't know. I mean, it's funny how we go from, oh, it's so much concentration, Mag 7 needs to rotate, to now everyone is just like pumping money back into the Mag 7. And honestly, if we get back to highs again, it's probably led by Mag 7. It's been a bit of a broader market rally. Yes, I would agree. But that was because everything was cheap in April. Right? Trade on platinum. I'll look at platinum futures. So platinum futures, and I've got this marked up on my charts here, but I've been watching this one for a while. I don't have a symbol to trade it in Tasty Trade with their futures offerings, but I mean, I like platinum as a trade that would be, if it's offered back into this zone around $800, I would like to buy it. I mean, I think this is a very strong support level. So it's coiling. I mean, I think there's money to be made in here. If you're looking for a bigger picture move, it's like, I mean, I could see this being a great trade, but you got to be willing to hold it. Hard part is if you're trading platinum futures, I mean, maybe there's an ETF that's like, all right, if I'm long platinum, is there a platinum ETF? What? You can play platinum. That's futures. CFD, that's non-US. So PL's futures. Platinum shares. I mean, maybe PPLT. Does it look at all like? You just don't have a lot of history on this one. But if this is, I mean, this is similar. If I just, bought this, I can buy and hold, and I think, yeah, platinum, and eventually squeezes out of this thing. So that, I mean, because I don't trade platinum futures, it doesn't have it in Tasty's platform. I do like, this low. It's like if I put, $1,000 at it here, $1,000 at it here, eventually this breaks. Do we get to all-time highs again on platinum? Maybe. I mean, that's 100+%, right? I mean, that's 90 to 100% gain for whatever I decided to allocate. So I mean, I've been watching this. I've seen a lot of these like futures feeds where got some currency futures, bond futures. Like, I mean, bond futures are probably just scalper's paradise right now. Just like buying and holding and seeing a little bit of a pop up. I am actively trying to lower my cost basis on TLT, to turn it back into income, but not really keeping a bunch of bond exposure. We'll see. Does that help on platinum? So I mean, I like it. PPLT. I'll just remember that ticker. I'm going to add that in here. So PPLT. I'll throw that in with my gold and silver. Actually, I'll throw this in with futures. There. Anything on the yields today? Still way off the Liberation Day levels. I mean, I'm going to watch this one. This is where I locked in my rate for the house. I'm closing on a house tomorrow. If we are, that's around 4.1. So if I see the 10-year down to like 3.1, then I'll be having a conversation on a refi. It's worth it if at least I'm in the house for 5 years and a 1% improvement is worth a refi. But if it's not, and we just stay here sticky, we're going higher than the 10-year yield, higher than the 20-year yield, global yields are rising. I mean, maybe we don't see any big improvement unless there's trouble ahead. Okay, what else? Let's go heat map today. Vinviz. So 56% of stocks advancing, 38.2 declining. Nvidia is the big star with the bright green. Tesla's up, Amazon's up. What's getting hurt today? Sector-wise, Uber's down almost 4%. Salesforce is down 6%. They had positive earnings. Salesforce had positive earnings. I don't know if their guidance was rough. They beat top and bottom. Boosted its revenue, downgraded Salesforce. Okay, interesting. Looking at the expected move here, 76 is down about $18. I was curious what that one would have been price-wise. Hims pulling back, Palantir at the highs. Carvana. Actually, like, how is this? Oh, it's still going. CRM down. Little toppy there in O'Reilly, Zillow, Uber. Uber pulling back off the highs. Lyft also pulling back. I still like Lyft. I mean, I'm gonna try to hold this thing into the $19 or $20 handle. Sector wise, let's go year to date checks. So year to date, we're flat in the S&P. What's performing well? Industrials, utilities, staples. Tech is now turned negative, which is interesting, but also tech was beat up so badly. And this is kind of wild, like financials, industrials, utilities. Again, I mean, rotation wise, this is either the last leg of a bull market or this is a rotation into things that are more defensive. This is one thing that will happen if the dollar gets weaker. If the dollar gets weaker, money will flow into more defensive sectors. So if your idea of like, I'm just going to be long tech, this may not be the year to be long tech. If the dollar remains weak, you're going to see money flowing into more defensive plays. Healthcare because of UNH, probably the reason this thing is down. I've taken a couple of stabs at UNH. I had money on the 165 by 160 just because of crazy high premiums. I'd like to see if that can just gap fill in the 300s and get me that 265 by 270. Let me check old Spotify today as well. Hopefully Spotify is back below 660. 651. That's good. That's looking better. I want to see if this one can return like 6. Well, I'll just put a chart on here at like 620. So I put on a double broken wing butterfly. So I have this one up here with a 670 pin price. This one down here to 470. This one is pretty much in full profit. This one is still in a drawdown, but the trade looks like this. We're trading at 651. So let's put 651 here. I have a broken wing call fly. And all the way down here, I've got a broken wing put fly. So nearly full profit on the put fly. I have a trap here. I mean, I make money on this trade as long as price is, I'd say between 682.25. So as long as price is less than 682.25, I don't have any risk in the trade. So if it stays where it is, I'll make about $250. If it gets in the profit trap, like 660 to 670 is a profit trap. Every dollar is $100 in gain. So anyway, we'll see. I'm just keeping an eye on this one. The easy trade is we fall on Spotify and I take profit on the call fly, profit on the put fly, and keep my $250. That's what I'd like to see. All right, what else? Somebody's asking about a day on gold, meaning what? You want like just today? So you want to go down to a smaller time frame? I mean, all I see on gold in the smaller time frame is you're scalping. You're scalping a 5-minute buy zone, and that's it. Like trade would have been at 5:30 in the morning. You're on a 1-minute time frame. Trade's been running bullish all morning since 2 a.m. So, I mean, if you want intraday stuff, it's like I'm going down to the 1-minute time frame, and that's what I see. So this thing's in a buy zone here. Chance to buy again, ride this thing up. Like that's a great trade intraday. So my go-to is if I'm doing intraday, I'm going back to 2007, 2008 when I first learned how to align my time frames. If you like the big picture of buying something, go down to a 15, 5, 1-minute chart and align your levels. And as long as they're showing buy zones, you're good, right? So 15 was pretty extended away from the 200 moving average. And if it's finding support resistance and support, if this is going to bounce, then you look for your alignments. And look, some traders, you don't even need the other time frames. I'm like, if your overall thesis is you're bullish on gold, then you're just looking at every opportunity to buy it. It's that simple. If you like gold and you think that the better trade is going to be bullish gold, then anytime you get a chance to buy it, you're long. Pulls back again, you buy it, stop loss, there's your trend, pulls back again, you buy it, you're long. I mean, you can repeat that. And there's tons of trades in here if you're that trader. Okay. I am not day trading. I'm not scalping like that with gold. I am waiting for a bigger portfolio position, which is, I think gold is still a bullish trade, but I'm just waiting to see, can we get a pullback into here? Can we get a pullback into some more attractive levels? Then I want to see some gold revisit highs, maybe go to all-time highs. Make sense? So there's my gold. All right, what else? Any other currencies? I'll take a look at top-down currencies, and then we'll kind of wrap things up. If you have some symbols you want to throw it at me, we did the dollar, we did oil, we did silver, we did gold, we did Bitcoin. Mag 7 Nvidia was the big news today. GDP came in negative 0.2. I don't know if this week's GDP reading is it the big scare, or is it going to be next quarter? Well, I would imagine it's going to be more next quarter. Why? Because that would be the potential. Oh my gosh, we had 2 contracting GDPs. That is a technical recession, but we might not get it. We might have a -1 this go around, and then going into next quarter, maybe everything's okay. Right? Okay. So still watching intraday price action today. There's my SPY. There's my SPX. Just watching, just hanging out. We'll see what tomorrow gives us. So a couple levels that I'll be watching. I have this level it was a 58.05, so I'm going to put a note down there. 58.05. So for tomorrow, I have a tiny little $25 risk for a huge profit trap here. Today I've got the broken wing put fly. Up here I've got some butterfly call spreads. And so if price goes up, there's a chance to make some high reward. If price goes down, there's a chance to make some high reward. For today, I just want to see price just kind of stay exactly where it is and turn today's trade into some profit. So this would be my winner today. Tomorrow, I'm willing to sacrifice one to make money on the other. I just want to see price go somewhere for Friday. So if it goes up, levels that I'm watching, let me go back to this for a second. So levels that I'm watching, we kind of been dancing around here all day. And I'm wondering, are we going to hang out at 5,900, maybe 5,925? Maybe I could toss a few bucks at this today as well. Let me see what this trades. If I went end of day today, 5,925. Okay, and go 10 wide, 10 wide. Did that backwards there. So that's going to cost me about $100. If I went a little bit tighter, can pin this thing. I mean, I'd risk about maybe $20 to $30 on the trade. If we close somewhere in between, it's like I can make some bucks on this if we're close to that 59.25 level. I'm going to see if I can get filled for 475 in this trade. And then the 5,900, same thing, 5,900. And put, call, see if we hang out around those levels, 4.80. Yeah, I'll let those marinate. If I get either one of those filled, again, small reward, high risk, end of day settling, it would be this. If price is going to go and just kind of dance around these levels for the day, and maybe it closes near them, then I've got a potentially $480 winner to risk $20. I don't know, Lee. Lee's asking about the taco trend yesterday, which is came out yesterday. Trump always chickens out. My concern is that he's going to double down on some tariff talk. That's my concern. I hope that he doesn't. I think that clearly, in April, if it meant anything, you can see what doubling down on tariff talk does. So I hope that's not the case. But that's like the big unknown. It's like, I mean, look, every day There's going to be something. It's going to be something Donald Trump. It's going to be something market related. Like, it's just crazy how it's like politics and markets are intertwined right now, because it's like the most in your face noise that I've seen in a long time, pretty much since 2016. You know, but now, yeah, I don't know. I mean, it's like any slight to President Trump, he wants to be vocal about it. He wants to, go like head on and fight it. It's kind of his abrasive personality. So I don't know, but I think it is nice to see like the courts got involved and say, look, the way that we rolled out this whole tariff program was not accurate, and you can't do that. And that was the question, like, from day one. It's like, can we actually do this? Can we do it this way? And I guess you can't. So, also a lot of things, and this is a big concern. All these executive orders can all be taken away. Like, after midterms, all these executive orders can be repealed in 2028. All these can be repealed, and that's my biggest concern going forward with the U.S. political system, is that the last party was always the worst party. The current party is the best party. We're going to undo what they did. We're going to do things better. Realistically, nothing gets done, and we're operating on these 2-year cycles because of midterms, and it's just not great. So at the end of the day, look, trading the financial markets, the markets do an incredible job of getting rid of a lot of the noise. It might react to the noise. Obviously, we had a lot of noise this year, but you can see that the markets are very reflexive and able to, I mean, price out stuff, get rid of all the noise, price out what's really happening. So the recession fears have gone down. Gains and resiliency and employment, like everything's been pretty stable since April 9th, basically. So yeah, to answer your question, I don't know. Going forward, it's your guess is as good as mine. It's just something that I'm not trying to lose any sleep over. So I mean, we have a vocal president. He's not going to stop talking. There's going to be headlines every single day. He'll still find his way on the economic calendar somehow. So just I'm saying, like, I'm not taking any crazy silly risks. It's like, that's all there is to it. As much as I've enjoyed this little melt up, I wish I was more aggressive. I think I was pretty darn aggressive since the lows in April. But once we started to hit that roadblock, right before the U.S. China trade gap to the upside, like in this area, I was extremely aggressive. And I think that was like what rewarded me. That's how I was able to get to all-time highs again for the portfolio for the year. But this little melt up, notice how we haven't gone anywhere, by the way. We're up, but we are sideways. So this is like the next big hurdle. It's like, the good thing about the bulls is that they have held up here above all these moving averages. To me, I don't see the bears doing too much damage. If they come back and retest these levels, that's probably a buying opportunity, right? And if they test these levels or maybe come a little bit deeper, it's like, as long as we close back above it, bulls are back in control. So this went from, what could be a bear market rally, right? If the market's paused right here, that would have been a bear market rally. But they gapped higher, and now we're spending 1 week above, 2 weeks above, 3 weeks above. We're 3 weeks above all of this technical resistance. So the probability is shifted now, where it's like the bulls are in control. And even if the market's going sideways, it's just a matter of accumulation. I think that this is going to be more of a accumulation zone. If it falls a little bit, so be it. But I think that's a buy the dip, and we're trying to get back to highs. So that's why I've said, like, the most difficult trade right now is if this is even if this is a distribution phase, are we going to go higher, or is it an accumulation phase? We're going to go higher. I would like to see a little bit of a pullback. Like, just have this rally check just a smidge. Because I'm a bull, man. Like, I'm trying to buy something better. I'm trying to buy some discounts. I'm trying to sell some options that give me a bit more premium. Instead of just seeing melt up, melt up, melt up. But I go back to what I showed earlier. Like, look at the yearly chart on the S&P from 2019 to 2020 to 2021. The S&P was up 90%. Right? It was up 90%. So we can have a crazy run like that. But the difference is the Fed is not dumping money like it did back in 2020. We're not spending trillions of dollars. We are potentially raising the debt ceiling. We are potentially increasing the deficit. We are seeing global money supply increase. So that is all happening in the background, but it's not to the same degree as what we had back in 2020. Also, one thing that's interesting, I don't know if I have I might have run out of screen space here, but I did take this one. This is the $7 trillion that are sitting in US money market funds, right? There's still money sitting on the sidelines in the US. Now, I mean, I don't know if this is $7 trillion because the baby boomers are one of the wealthiest generations. And so what does that mean? They're not taking risk right now at 65, 75, 80 years old, nor should they be. So what are they doing? They're benefiting from, a measly little 4.5%, but it's 4.5% that's risk free. It's illiquid, but it's risk free. And if they've got, millions and millions of it, it's like, do you need that much? If you've got money market instruments that are yielding 4.5%, I mean, it's essentially risk free. It's not really staying ahead of inflation. It's not really staying ahead of your debasing currency and loss of purchasing power, but it's not hurting too badly. What would hurt too badly would be that we've got like higher inflation coming. A mild case. I don't know if this is kind of an oxymoron, but a mild case of hyperinflation. But this money's on the sidelines, and from a from a sentiment standpoint, either this crowd is not going to take risk, and they're just going to sit in money market instruments, or I see this happening two ways, right? This money does the following. Okay, either one stays risk free and collects, 4.25, 4.5, like whatever you can get for a current yield, right? Or it stays risk free because you could do the what would it be? What's the TLT and chill? Is that the thing? Or just say risk free and chill, which is you just look, if global yields are rising and you can still get a 4.5, 4.25, maybe goes up to 4.75, 5%. I mean, it's going to be hard to get people that don't need to take the risk, don't want to take the risk. It's going to be hard to get them off the sidelines if you're still getting 4 or 5%. Because in their mind, they're thinking that inflation is 2.3%, 2%. Well, as long as I am yielding, 4.5%, they think it's like you're just not having the pain of like losing a ton of cash. The reality is you probably need to make about 6 to 8% a year just to stay ahead of debasing, loss of purchasing power, and inflation. Realistically, that's what's happening. Okay. But here's the rough part. This crowd comes back into risk because yields drop, right? And what about timing? Okay. This money, if all of a sudden yields drop to, let's say the 10-year drops to 3% or lower, let's say the Fed cuts rates and all of a sudden banks are only offering like 3% on a money market instrument, right? 2.5%. It's like you're barely, if not losing, you're losing money at that point. Is that going to force people out of risk free and go somewhere else? Where? I don't know. Maybe gold, maybe back in the equities market. But the timing of this is like, if $7.2 trillion decides to come back into the markets near all-time highs, I think that's going to be like a bubble bump, but the timing of that would be pretty terrible. Like, I'll ask you this. If you had $7 trillion and you want to put it in the stock market, would you put it in right now? Not all of it. Certainly not all of it. I mean, I would dabble, but it's like I would be leveling in anywhere between now and another 10% lower, or it goes up and then you get another 10, 20, 30% pullback. It's like it would be just bits and pieces that you'd have to like bite into the markets, not just dump it. But you never know, And so if people are watching yields go down and they're feeling like their hand is forced to get back into the markets, if we're sitting near all-time highs, it's like I could see that being money on the sidelines that gets us, a little bit of a bump. But that crowd, I think like the timing would be terrible. I don't know. But ultimately, what's the market try to do? It just tries to make all-time highs. That's what it's trying to do. So I just thought this was interesting because like this is a ton of cash, and look, you always hear about this. Nobody's participating. Money's on the sidelines. Money's on the sidelines. Look, it's always on the sidelines. There's always money on the sidelines. All we do is see money sit somewhere. And I mean, the fact that risk-free yields have been, 4.5. I mean, in my Roth IRAs, I put a handful of trades in that were like 5.25, 5.5%, and I locked it in for over a year. I hate doing that stuff, but it's like it was easy. I did one for Goldman Sachs, one for Wells Fargo, one for JP Morgan. It was like all 5.25, 5.5% money markets. Okay, well, once that year was done, I mean, what's it offering now? 4 and change. So I cut it and I'm investing elsewhere. But I dabbled. I mean, it felt pretty easy to grab, 5% risk free, 5.5% risk free. But it underperformed, as it always will. But that's the trade-off of being in equities. There's going to be drawdowns, there's going to be risk. Your average return at the equities market is about 8% to the upside, but your average drawdown is 13%. That's history. So as long as you can deal with that, like reward to risk ratio, that risk adjusted ratio, I mean, obviously the upside could be 20, 30, 40%, but the downside could also be 20, 30, 40%. So it's just a game. It's just a big game. But there's a lot of money sitting on the sideline still. I'm wondering if this does anything. Does this money come out and play? But if yields keep going higher or yields are sticky and hanging out at 4 or 5%, maybe it doesn't entice anybody to do anything other than just sit in cash, right? Like this is sitting in cash. It's not hurting, but it just depends on your financial situation. If you got enough assets where you can sit risk free and get 4 or 5% and you're able to live comfortably, I mean, I wouldn't want to take any risk, So anyway, just some thoughts. All right. I think I'll wrap it up there for today. Just final thoughts. Dollar wise, if we revisit lows on DXY, I'm looking for that 1500 level on euro dollar. Index wise, I mean, we have 3 weekly indecision candles, right? I mean, it's not indecision, but like because of that US China trade gap, that candle is my resistance and my support. So that's 57.60 highs, or I'm sorry, 59.60 highs and 57.70 lows. That's on SPX. So if we're going to dance around in here more, it is what it is. I could see the market doing nothing for the next, couple of weeks. Maybe not going anywhere. Maybe fake outs, maybe not going anywhere. I'd love a pullback. Doesn't change anything, right? A pullback to me is a buying opportunity. Look at the daily time frame. To me, this is really good support. Really good support, right? If it pulls back deeper, I mean, here's an easy way to trade this. You get some support, you take a bite. It comes back down below. If it's at a decent level, I'd still take a nibble, but I'd be looking to add more to it if it gets back above this cluster of moving averages. So it's like, I don't think we're coming back to break the April lows. I think we can, test some gaps. We can fill in some liquidity levels here. If this is a reversal pattern where we have this as a potential pullback zone, it's like, yeah, we can do all sorts of stuff here. Fib wise, low, high, pullback anywhere, 30, 38, 50%, 61%. Doesn't take out the low, right? But do we get some accumulation to then revisit highs? So again, hardest part right now is feeling like I got to be patient because I'm getting annoyed with this market melting up higher, but yet in the last 2 to 3 weeks, it hasn't really gone anywhere. It was one pop on the US China gap, and then the market hasn't eclipsed those highs yet. So we're sideways. We're not falling down. We're not pulling back. I'm not bearish. I'm trying to be patient, So, all right, I'll let you go from there. All right, have a good rest of the day. We'll see you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.